future. EcomBX. With us, the future is today.
InfoCredit Group, a leading provider of compliance and risk solutions for more than 45 years, empowers businesses with a sophisticated suite of AML and KYC tools, which can assist you to mitigate risk and meet your compliance challenges and regulatory requirements. Our solutions vary from prior to client onboarding and all throughout the life cycle of your business relationship with your client. LexisNexis Work Compliance data through which you can screen against sanctions, PEPs, and media, automate your procedures and reduce false positives so to proceed to onboarding with confidence. Risk-based approach tools to categorize clients based on their risk and know when to apply appropriate due diligence. ID and passport verification as well as AML consulting, manuals and legal solutions to be sure you are up to date and in compliance with all regulations and directives. InfoCredit Group is a strategic partner of the leading risk management and data analytics LexisNexis Risk Solutions, with representation in Cyprus, Greece, Malta, Romania, Russia, and the UAE.
Two brothers with a taste for adventure who set out to have a positive impact on the world by developing unique compliance solutions. Their mission? To fight global crime, providing the weapons to fight crimes directly related to money laundering, human trafficking, drug trafficking, organized crime, and terrorism. Helping desperate compliance officers protect their organizations with a compliance software platform like no other. The result? RegTech Platform, a regulatory technology platform, an end-to-end KYC and AML solution which delivers tools that minimize your risk exposure and help you in the fight against money laundering with facial recognition technology, document verification technology, negative list screening for exposing sanctions-listed people and politically exposed people, risk categorization, transaction monitoring. This platform is now being used to protect organizations with hundreds of thousands of clients around the world. A complete shield against money laundering, from onboarding to KYC to ongoing monitoring of the client, giving you, the compliance officer, the most effective weapons to fight crime, bringing peace of mind and changing the world for the better. Over the years, we may have grown, but we're still doing exactly what we set out to do, having a positive impact on our world.
Linux containers let you package applications with their necessary dependencies to simplify application deployment and speed delivery. But securely delivering and maintaining container-based apps at scale can be complex. That's where we come in. Containers rely on Linux, and no one knows more about Linux than Red Hat. We're active in open source container communities and the second largest contributor to the Docker and Kubernetes projects. With containers, as with everything in IT, security is your largest concern. To keep your containers safe from one another, we use isolation technologies like SE Linux. To make sure you can trust each container you choose, we offer a collection of source images that are continuously scanned, monitored, and updated. And to keep your environment safe, we provide tooling to inspect and approve containers as they move from development to production. Standardization and consistency create a common foundation that leads to greater application portability. We work with the Open Container Initiative and the Cloud Native Computing Foundation to help set and promote shared standards. And infrastructure consistency means you can confidently deploy and maintain container-based applications anywhere, from bare metal to cloud environments. When you're ready to scale, Red Hat's container platform gives you the architectures, tools, and processes to help you streamline container creation, deployment, and orchestration workflows. This means you can maintain, update, and patch containers continuously. Our tools help you manage it all, no matter where your infrastructure is going, and the documentation, services, and expertise to get you there, whether you need lots of help or just a little advice. Ready to get started? Visit redhat.com/containers.
Τα προσωπικά σας αντικείμενα είναι μικρά, αλλά πολύτιμα. Ασφαλίστε τα με το Alpha Feel Safe. Καλύπτει απώλεια ή κλοπή μόνο με 30 ευρώ το χρόνο. Από την Alpha Bank σε συνεργασία με την Altius Insurance. Η ζωή πάντα προχωράει με στόχους, όνειρα, σχέδια. Με το Alpha προσωπικό δάνειο σε χαμηλή μηνιαία δόση, η Alpha Bank σας βοηθάει να ικανοποιήσετε όλες σας τις ανάγκες και να φτιάξετε τη δική σας ζωή. Αλφα αυτοκίνητο με χαμηλή μηνιαία δόση και έγκριση σε 24 ώρες. Και για αυτοκίνητο
υπάρχει μια δόση που ο καθής μπορεί να δώσει.
Από την Alpha Bank. Αλφα επιχειρηματικά δάνεια. Ένα σύστημα από εξειδικευμένες καλύψεις και δάνειο εξοπλισμού για να αναπτύξετε με σιγουριά την επιχείρησή σας.
Για ανάπτυξη στην επιχείρηση, θες Αλφα μεταχείριση.
Αλφα επιχειρηματικά δάνεια. Ένα σύστημα από εξειδικευμένες καλύψεις και δάνειο επαγγελματικού ακινήτου για να αναπτύξετε με σιγουριά την επιχείρησή σας.
Για ανάπτυξη στην επιχείρηση, θες Αλφα μεταχείριση.
Για τις αγορές σας σε υπεραγορές, φούρνους και ζαχαροπλαστεία, τώρα επιστροφή μετρητών 4% από τις κάρτες Alpha Bank μέχρι τις 31 Ιανουαρίου από την Alpha Bank.
με σημαντική ιστορία. Βάζουμε πλώρη για νέες επιτυχίες. Για μας, την Κύπρο και τους ανθρώπους της. RCB Bank. 25 χρόνια στην Κύπρο.
What is return on investment? It's the benefit to the investor resulting from an investment. It's how much you get for how much you give. So, how much do you get when you invest in Cyprus? You get a high-potential, dynamically growing economy. You get a modern and attractive tax and legal system. You get high-quality professional services, highly qualified and multilingual personnel. You get location, location, location. But you also get a lot more. A kind of return on your investment that's harder to find in other destinations you might be considering. You get a safe place to relocate yourself, your employees, your business. The crime rate in Cyprus is one of the lowest in the world. A sunny place. Cyprus's Mediterranean climate means you can enjoy almost 300 days of sunshine per year. A diverse place. You can enjoy the beauty of the beach and the serenity of the mountains with just a 30-minute drive. Cultured place. You can enjoy 12,000 years of history through museums, archaeological sites, and religious sites. You can enjoy classical and modern art performances, sports of all sorts, an active lifestyle, and so much more. There is never a dull moment, unless, of course, you simply want to tone it down and relax, which you can also do in a variety of resorts, nature excursions, or small picturesque villages. You get a country that's great for kids and families. There are more than 90 high-level international schools, a plethora of parks, playgrounds, and year-round family events. Perhaps you thought you couldn't have the best of both worlds. In Cyprus, you can. A country that's exceptional for business and ideal for living. A country where your real return on investment lies not only in numbers, but also in the quality of life that you, your family, and business associates will enjoy. Your investment will yield long-term business returns and unique personal rewards. It's time to redefine your return on investment. It's time to invest in Cyprus.
Digital disruption. It's a new world, and organizations must think in innovative ways to stay ahead. This is where Logicom Solutions comes in. Logicom Solutions works with the largest organizations in the region to implement a digital transformation agenda that enables organizations to always stay relevant, while partnerships with the largest technology vendors and consulting firms in the world like Cisco, Accenture, Microsoft, and Dell Technologies help transform ideas into digital businesses. The Business Consulting Services Unit provides high-quality value, adding advisory services that evolve around building a digital future for businesses, and identifies growth opportunities with a data-first model. Business Consulting Services Unit helps organizations identify and unlock new sources of economic value and achieve step function improvements in productivity, flexibility, and speed. The Business Solutions Services Unit offers sustainable software solutions designed to reinvent the business application portfolio in the areas of digital workplace portals, customer experience and mobility, analytics, blockchain, customer relationship management, and enterprise resources planning. The Technology Solutions and Services Business Unit delivers cutting-edge ICT infrastructure in the areas of data centers and business continuity, security, collaboration, network, cloud, and IoT. Logicom Solutions is a certified Cisco Gold partner and has successfully implemented and currently maintains the ICT infrastructure of several organizations across multiple industries. Logicom Solutions offers a complete solution in reaching your full digital potential, including your company's culture and digital training, to solving organization challenges and providing a complete infrastructure overhaul to maximize your capabilities. Logicom Solutions, your trusted digital transformation partner.
Ladies and gentlemen, please be seated. The conference will begin in 10 minutes. Ladies and gentlemen, please be seated. The conference will begin in 5 minutes. Ladies and gentlemen, please be seated. The conference will begin in 3 minutes. Ladies and gentlemen, please be seated. The conference is about to begin. Before the official start of the conference, we'd like to briefly draw your attention to a few operational matters in order to ensure the smooth running of the event. First, please make sure that your mobile phone is switched to silent mode. For free internet access, simply connect to the Open Wireless Network under the name Hilton Honors Meeting. Presentations of today's sessions will be available on the IMH website, imhbusiness.com, within the next 3 working days. You will be sent an email with a password that you can use to download the presentations.
You can also send in questions anonymously throughout the conference that will be answered during the Q&A session as stated in the conference program.
Ladies and gentlemen, good morning. On behalf of IMH, it is my pleasure and privilege to welcome you all to the 9th Banking Forum and Fintech Expo presented by Logicom Solutions. First, we would like to extend our warmest thanks to our main sponsor, Logicom Solutions, our sponsors and exhibitors, EcomBX, George Z. Georgiou Associates LLC, IMR University of Nicosia, InfoCredit Group, iSpiral, PW Cyprus, and Zebra Consultants Red Hat. Our supporters, Alpha Bank, Ancoria Bank, Astro Bank, Bank of Cyprus, Eurobank Cyprus, Hellenic Bank, and RCB Bank. Conference experience sponsor for today, Conference, powered by Invest Cyprus. This year's event is being organized with the support of the Association of Cyprus Banks and the Association of Cyprus Electronic Money and Payment Institutions. Finally, let us not forget our communication sponsors, Gold Magazine and In Business Magazine. Organizer, IMH. Prior to the official start of the forum, we would like to briefly draw your attention to a few operational matters in order to ensure the smooth running of the event. First, please make sure that your mobile phone is switched to silent mode. In view of the Ministry of Health guidelines on the protection of delegates from COVID-19, it is essential for your own protection that you wear a face mask for the duration of the forum. For the same reason, handshakes are not permitted. In front of you, you can find the final program of today's forum, as well as an evaluation form for the event that you are kindly asked to fill in. For free internet access, simply connect to the open wireless network under the name Hilton Honors Meeting, check both boxes for terms and conditions, and click Connect. You can also find in front of you information about the conference platform, which will be in operation for the duration of the forum. This is an online interactivity platform, which, among others, allows you to review today's agenda, speakers, and sponsors, submit questions to the speakers anonymously, and evaluate your experience with us here today. To gain access, open your browser and visit www.conferias.com. To log in successfully, enter the ID Banking 2021 in the For Attendees section as shown on the screen behind me and click Enter. Presentations of today's sessions will be available on the IMH website www.imhbusiness.com within the next 3 working days. Following the event, you will be sent an email with a password that you can use to download the presentations. I would also like to inform you that coffee will be served during the event at the sponsors area. The coffee break later will take place at the same area. At the end of the forum, we will be serving some drinks and bites for you to allow further networking between you. For any inquiries or assistance during the day, please contact the IMH Secretariat located at the foyer outside this room. And now let us all welcome on stage the chairman of today's proceedings, Managing Director at Logicom Solutions, Chrysostomos Kridiotis. Mr. Kridiotis, the floor is yours.
Distinguished guests, ladies and gentlemen, welcome to the 9th Banking Forum and Fintech Expo, presented to you again this year by Logicom Solutions. I would like to start by thanking all the sponsors, supporters, and of course IMH for successfully organizing for the 9th consecutive year this event. And what a pleasure it is this time, after 2 years, to have our esteemed audience and most of our speakers here physically with us. Back in January of 2021, during the last Banking Forum, we highlighted the uncertainty that lay ahead for banks and talked about the opportunity to transform their business models so that they emerge from the crisis and into the new reality much stronger. Now, as we approach the end of the 2nd year of this worldwide pandemic, the uncertainty continues. But we can definitely say that the global economy has positively surprised us, with the banks demonstrating considerable resilience during this unprecedented crisis. Banks were, of course, much better prepared to deal with adversity than during the last financial crisis. They entered the pandemic with reduced and more manageable levels of bad loans, stronger capital positions, and ample liquidity. Nevertheless, banks will continue to be affected by the volatile pace of growth in the global and European economies. Both national governments and the European Central Bank have stepped in with actions to soften the economic blow of the pandemic. But as these measures are phased out, there is a good chance that many businesses will go under and unemployment will rise. This will force some banks to book higher loss provisions and deplete capital buffers, and could ultimately affect their ability to provide enough financing to support economic recovery. The pandemic has intensified other challenges already affecting European and Cypriot banks. Costs are too high in a time of zero or negative interest rates, and bank returns are below their cost of capital. The COVID-induced economic contraction has put even more pressure on the bottom line, and the demand for loans remains uncertain according to the ECB. While the rebound in sector share prices in 2021 is highly encouraging, banks cannot afford to be complacent. The challenges they face are daunting, and to emerge stronger from the crisis, banks must be decisive and take strategic action now. They need to start by undertaking a strategic review of their balance sheets and internal credit processes in order to minimize the impact of any deteriorating credit quality. They need to radically transform their cost base, streamline their operations, and consider more seriously mergers, including cross-border deals, to create the right synergies which will allow them to invest more in their transformation and competitiveness. Large-scale change is required, and it must be based on the strategic positioning of each bank. In addition, the scale of the technological transformation of financial services over the past decade cannot be overstated. And banks can no longer take customer loyalty for granted amid competition from fintech and big tech players. This change requires all bank operations to be run from a robust and future-proof digital platform. Banks must continue to digitize their own platforms and modernize their legacy IT systems. But to do that, banks should make their business more flexible, secure, and most importantly, scalable with the help of technologies like the cloud. A more streamlined and data-rich IT platform will also enable banks to anticipate the demands of their increasingly digital-savvy clientele and offer them highly personalized and relevant services. Banks will also have to provide environmental, social, and governance ESG disclosures to build the sustainable models demanded by customers, shareholders, regulators, employees, rating agencies, and other stakeholders. And last but not least, to bring change, banks need to have a motivated and aligned with the vision of the organization workforce, which possesses the right skills and culture to support a successful transformation. Navigating through another challenging year, banks need to transform in a way that delivers results for themselves, their customers, their shareholders, and the society as a whole. They need to invest in their transformation to respond in a more agile way to market and customer opportunities, with a focus on strategic cost management, greater resilience, and enhanced customer centricity, which will position them to drive more sustainable change. I'm sure all these topics will be discussed and further elaborated by our esteemed speakers today. In this year's Banking Forum and Fintech Expo, we have worked with IMH to bring to you thought-provoking discussions and insightful presentations from regulators, thought leaders, bankers, and fintech experts. We will have the honor to hear the perspective of the regulator from the Vice President of the European Central Bank, Mr. Luis de Guindos, and from the Governor of the Central Bank of Cyprus, Mr. Konstantinos Irodotou. We will have the pleasure to have the views of the CEOs of the major banking institutions on the island and discuss the progress of the digital transformation of the sector with the technology leaders of these institutions. We will look into the fintech market and discuss new and innovative technologies. And finally, discuss how banks and fintechs can strengthen their cybersecurity posture. And before I move to our first speaker, I would like to wish everyone an insightful and productive morning. I now give the floor to Mr. Burkhard Eckes, Banking and Capital Markets Leader for EMEA from PwC, to provide us with an outlook for the European banking industry's agenda. Mr. Eckes will be joining us through Zoom. Mr. Eckes, the floor is yours.
Okay. Thank you very much, Mr. Chairman. Thank you very much for the invitation. I'm delighted to be with you today here, and I would like to talk in the next couple of minutes in my speech about 3 blocks. The first block is about the challenges for the banks. The second one is about trends we are seeing right now. And the third one is what does it mean for the strategy of the banks. Regarding the challenges, you mentioned already a couple of them, and I clearly can say never were times so challenging for banks as now. Just to give you a couple of words. So we are facing a demographic change, which means aging and urbanization calling for a focus on the social economic needs. We also are facing diminishing trust in institutions, a need for transparency and accountability. We also see disruptive technologies impacting individuals, society, and climate, forcing companies to revisit IT strategy. It's also about growing dependence on data, forcing banks to invest in data management, democratization of emerging technologies, lowering barriers to entry into the banking market, and also a growing platform-based industry leading to a desire to minimize physical footprint. But we also see shift in economic power, a low for longer interest rates, but maybe not so long anymore, rising government spending to support economy, and also a higher level of credit losses expected due to the global economic downturn caused by COVID-19. We see a scarcity of resources and expanding population, the climate change impacting the exposure of banks, mounting regulations, rising regulator expectations, deglobalization, open banking, embedded finance pose threats as well as opportunities where banks need to act or get left behind. Demand for level playing field, geopolitical tensions. We also see inertia of customers, often mistaken for loyalty, is risky for banks where customers are now more informed and have choices. Changing consumer behavior driven by experiences in other industries and increasing tech adoption. Hyper-personalization fueling new marketing techniques, new ethics and social conscience. Big techs, neobanks encroaching on market share. Dispersion of the value chain, forcing banks to reconsider their business model. Distributed ledger technology, virtual currencies, increased appetite of alternative financing, IT, cloud, impacts operational resilience, attractiveness of investors, changing nature of tomorrow's bankers and workforce, and also sustainable, profitable business models and position. These are not all the challenges banks are facing, but these are the main ones. If I may move to the main trends, and I see amongst other trends, 4 or 5 trends which I would like to highlight. The first one is about evolving customer expectations and behaviors. The customers' expectations from banks are increasing, with a call for greater speed and personalization. Customer interaction with banks are changing fundamentally towards digital with hybrid model for more complex products. Second trend is changing expectations of banks' role in society. Technology will continue to play a key role in achieving operational efficiency, as banks have not yet captured full potential of digitization. Technology and innovation will disrupt traditional value chains, and best-in-class banks will capture value from platform services, targeted marketing, and hyper-personalization. The third trend I would like to mention is about technology and innovation continues to disrupt banking. Technology will continue to play a key role in achieving operational efficiency, as banks have not yet captured full potential of digitization. Technology and innovation will disrupt traditional value chains again. Best-in-class banks will capture the value from platform services. The fourth trend is about consolidation to pursue scale and capabilities. Likely to remain high, not only to gain scale, but to acquire key digital capabilities and optimize balance sheets utilization. Partnerships and ecosystems likely accelerate to become central part of digital strategies, and landscape changing with new tech players gaining traction. And the fifth trend is about application and adoption of technologies and data. And here I see a couple of points which are, I think, quite important to have in mind. Technology-driven transformation takes more time than promised and requires manifold support from strategy through execution. Cybersecurity threats will grow exponentially as digital networks grow and cryptographic algorithms need upgrading. And the rise of large consumer-centric platforms is driven by tech players, takes it all, and incumbents moving into commodity role at best. Successful companies leverage technology for new product propositions of working that result in new revenue streams and improved efficiency. Customer intelligence will be the most important predictor of revenue growth and profitability. Analytics will drive customer satisfaction and revenue growth. Data is a new gasoline, but players need a use case engine to drive business via advanced analytics on big data. Widespread adoption of robotics and artificial intelligence start a wave of reshoring and localization, offering greater operational agility. And last but not least, composable infrastructure eases the development of new capabilities and improves access to information, technology, and partners. So these are, from our perspective, the 5 main trends I would like to highlight. And what does it mean now for the strategy of the banks? So the banks need to prepare strategic responses to remain viable, capture growth potential in the evolving sector landscape. So 5 points I would like to highlight. The first one is innovate propositions. So this means changing, to have in mind, changing customers' preferences, and maturing technologies requires banks to innovate propositions. Hyper-personalization as well as embedded finance capabilities. Bank break down internal segment silos. So for example, retail versus private banking to better leverage capabilities. Further grow lending capabilities and tap into local ecosystems. Second point is about develop integrated ESG strategy. The trust becomes increasingly scrutinized. Banks need to ensure that trust in the sector is further restored and embed ESG into corporate strategy and leverage ESG factors to differentiate client proposition. Uphold the highest standards in your own operations by having strong governance, conduct, duty of care, culture, and behavior. The third point I like to mention is about build data and analytics capabilities. Data capabilities are strategically critical to launching more digital technology-driven propositions. Data and analytics are key to A, monitor client preferences and recognize buying triggers, personalize offerings and tap into platforms and open interfaces. C, predict client attrition, and D, explore willingness to pay and improve risk returns. Number 4 is about accelerate cost-based restructuring. For banks to improve performance requires structural cost reductions. Banks should focus on taking out complexity, drivers to lower costs and increase flexibility. So for example, products and system rationalization. And banks should free up budgets and resources to reinvest into building differentiating capabilities. But not least, number 5 point, I think, which is important for strategy for banks, is about identifying differentiating capabilities to scale. And this means differentiating capabilities are also instrumental in remaining relevant and growing in a consolidating industry. Building scale beyond national borders will be necessary to grow. And this implies that banks need to increasingly focus capabilities in the value chain where they are truly market leading and differentiating. So these are the main points I would like to highlight when we talk about the outlook of the European banking industry's agenda. Thank you very much for your attention. Thanks.
Thank you very much, Mr. Ekes, for your presentation. Don't know if we have any questions from the audience. There is a mic going around. If there are any questions for Mr. Ekes. So we have one question from our audience. How can banks generate net interest income in this low interest rate environment, and what is your view on Euribor for the next 1 to 3 years? Mr. Ekes?
Yeah, that's a very interesting question. I think you're absolutely right. In this low interest rate environment, it's extremely difficult for banks to increase their interest rate revenues. I think that's clear. And if you look what has happened in the past to the banks, you clearly can see most of the banks have facing a decrease of low interest rate revenues, or which might be even more important, the margin are going down. And as a result, a lot of banks have now tried to move more into fee income, to increase their fee income. And with regards, what is the future of the interest rates? I think, or the Euribor, I think that was a question, if I understood you correctly. Well, when I'm traveling around Europe and I have the opportunity to meet a lot of people like you, CEOs, CFOs, CROs of larger banks, to be honest, I have not met any bank who says that the inflation risk is just a short one. Yeah. So most of them are clearly saying this is at least a midterm one for many reasons. One reason is that we see the disruption of the value chain. The uncertainty of COVID-19 is not over at all. We see also an upcoming spiral of salary and price. And we see also that the demand is much higher in ESG products, for example, but also in other goods than it is able to be delivered. So therefore, most of the banks say this inflation will not go away, and also some of the banks are criticizing that the ECB is not managing this appropriately. But what does it mean for the interest rate? So more and more banks, or at least I have seen, they are expecting that maybe in the next 2 years, we will see a slight increase of interest rates because, as you know, the Federal Reserve Bank has already started to think about the Bank of England. They have already increased their interest rates. So sooner or later, the ECB might have to follow. Of course, ECB is also in a kind of a trap because on one side we have a lot of countries which have a high debts, and maybe increase of loans, increase of interest rates might be a problem. On the other side, this also could have a huge pressure on the value of assets. So therefore, it's not easy to take the right decision. So I fully understand what ECB is thinking. But on the other side, the expectation seems to be that we are expecting maybe in the next 2 years a slight increase of interest rates based on my conversations I've had with banks across Europe.
Thank you very much, Mr. Ekes. Thank you for your presentation and answering our audience's question. Thank you very much. Let's now move to our next speaker. Mr. Panikos Nikolaou, CEO of the Bank of Cyprus. Mr. Nikolaou, the stage is yours.
This is working. Kalimera, good morning, everyone. I feel very honored and privileged to have the opportunity to provide you some insights about the past, the present, and most importantly, the future of Bank of Cyprus, what we plan to do for the future. So who we are? We are the leading full-service bank in Cyprus, strong brand, market leader, with diversified financial group, not just banking services, but also insurance, payments, and others. We have, as a management team, a track record of strong delivery. We always deliver on what we promise. And leading digital bank on the island. And most importantly, more than a bank. So we have Support CY, we have Bank of Cyprus Oncology Center, Cultural Foundation, and IDEA. So very, very quickly, the past, the present, and the future. I will not spend much time on the past. I will just mention 2 dates. 1943, it's the date that we launched the well-known Kinon Kyprion. And 1960s, because this is linked with what I will talk later about technology. The Bank of Cyprus at that time was the first one that brought Evlambios. This was a name. It was the first computer implementation adopting modern trends in data processing. So the present, the bank, 10 billion in gross loans, 15 billion on deposits, 40% market share in loans, 35% in deposits, 9 billion of new loan originations, actual disbursements since 2016. There is a lot of debate and discussion about restructurings. Yes, we have done 7.5 billion restructurings the last 5 years, and we have reduced our NPEs by 14 billion, or 94%, which is a world record versus the size of the country and the GDP. So we are roughly 13 billion GDP country. Bank of Cyprus alone has reduced the NPEs 14 billion, single digits as of November this year. But we spend a lot of money. We want to a lot of money on technology. We focus on technology, and we want to move as fast as we can. So we have 3,025 active digital users, active. It's a huge number for the size of the country. We have 120,000 quick pay users, again active. And during the first 10 months of 2021, we have 31 billion value of transactions. Some awards there for everyone to know. We spend a lot of time and effort on new services and products. So I'm just naming here a few. We have launched this year digital onboarding, digital KYC. We have enhanced our digital product offering, e-credit cards. You cannot do your motor and home insurance through the mobile application of the bank end-to-end and get your contract on the email at the same time. Digital signatures via mobile, and of course, as everyone, we spend a lot of time and effort on ESG, energy savings, 16,000 of cancer patient treatment in our oncology center, Bank of Cyprus Oncology Center. and 30% of our board directors are female. So then back to the future, I picked a quote from Jack Ma. Okay, difficult times for him right now, but you know the name, Alim Bamba, executive chairman. So it's not the technology that changed the world, it is the dreams behind the technology that change the world. And I would add that banks that perceive themselves as just lending factories are doomed to fail. Myself and the team of Bank of Cyprus are true believers in lifestyle banking, and I will explain later what I mean. So, we are running two projects on Bank of Cyprus. One is what we call Project Sunrise, and the second one is very closely related with technology. So, Project Sunrise, distribution model. We want to enhance, to use digital channels. We want to have 30% of our products offered through digital channels. We want to migrate transactions to digital and alternative channels, including deposits. So we want most of the deposits, roughly up to 80%, to go not through the branch. And I will explain what initiatives we have later. We modernize and we scale up our call center. And of course, we are introducing a new operating model in our branches, focusing on customer needs. Customer-centric. We don't use anymore the bazooka approach, everyone the same. So we create segments for our clients, value propositions, and products per segment. So not everyone is the same. We use data analytics to provide solutions based on lifestyle and needs, and we want to increase the time spent of our staff with our clients to be more than 50% of the time. Currently, 35%. We want to go up to 50 through elimination or centralization of no value-added activities. And this is closely related with the new operating model in our branches. And of course, we aim to process re-engineering. We initiate a large project to re-engineer our core lending processes. We want more than 25% of journeys to be automated, so no human interactions in the approval process, and improve time to yes to 1 to 3 days. And streamline of our AML and KYC process to become more efficient. Already we have our private individual clients that can do their KYC through their mobile, and the trends are very encouraging. From 0% we had all KYCs in the branches, I think now we are close to 50%, and we aim to go to almost to 90% for the low-risk clients. It's a huge initiative. It's very easy, and it saves a lot of time from our staff in the branches. And this is what we mean, increase the time spent with our clients to more than 50%. So this is Project Sunrise. The name is, it was a lot of thought about the name. It's Sunrise because it requires a lot of changes within the bank. But we are on year 1 of a 3-year journey. So we completed the top-down, we completed the bottom-up. We have a very, very detailed manual handbook on all the initiatives that had to be made, more than 600, and we are implemented it in a very diligent way. So technology, digital channels. We invest, we focus on our mobile and web banking channels. What is coming next? I'm giving some examples. Mobile check deposits. We do hope that you can scan, if you are a Bank of Cyprus client, you can scan your check and you can have it directly deposited in your account. So this is coming early next year. No need to go to a branch. Personal financial management, money fit, what we call it, is coming also early next year, probably. I think it's on a pilot phase. It's a state-of-the-art tool that actually will provide some insights to our clients of how they will manage their financials. Digital products, we want to be able, by mid next year, to have unsecured personal loans and overdrafts through the mobile, no human interaction. And of course, we promote some additional services, investment management application, we will call it BOC Invest, and junior application. We focus on our new client generation, so we want to have products and applications for teenagers, because we want them to continue with us being clients. And the major initiative, the last one, it's what we call channel link with life-sensitive financials, products, services, digital economy platform. We use data. We leverage data. We have more than, you have seen on the first slide, more than almost 700 active clients with accounts in the bank. So we have a lot of data, and we need to make use of them. So we use data to make smart and fast decisions, digital scorecard, pre-approved lending, end-to-end processes, and of course, integrated regulatory reporting, because for the bankers and the CEO, they know how cumbersome is this regulatory reporting. And provide insights to customers to facilitate life decision. I mentioned before the personal financial management, and of course, industry insights and actionable market trends. And our latest initiative, which I consider a breakthrough for Cyprus, for promoting digital economy in our country. We are working, establishing a digital economy platform ecosystem, how we call it. We want to bring corporate customers together, B2B, bring corporate customers together with their clients, private individuals, B2C, cooperate with technology integrators, platform providers, and fintech. So all these three initiatives, technology related, are actually the future of Bank of Cyprus. We spend a lot of time, a lot of focus. We want to move as fast as we can. And of course, my vision for the bank, for the future of the bank, I want to see the bank of the future as being nimble, frictionless, and collaborative, the preferred bank for our customer, and a great place to work for our employees. So I will close my short presentation with the word lifestyle banking. This is where we focus: technology, transformation, and I will again mention what I mentioned before: banks that perceive themselves as lending factories, they are doomed to fail. So we need to change the way we think, the way we work, and technology is the only way forward. So thank you all for listening to me. Thank you.
Thank you very much. Thank you, Mr. Nicolaou, for the insightful presentation. Thank you very much.
Thank you.
So we move on with the keynote presentation of Mr. Oliver Gatske, CEO of Hellenic Bank. The floor is yours. A nice introduction to your speech.
Good morning. Oops. Good morning, ladies and gentlemen. It's a great pleasure to be here. I'm not the only German. I understand Burkhard Eckes, who I know quite well from my time in Germany, gave an outlook on, what's going on in Europe in banking. And following Panikos, who talked a lot about, BOC, I would like to focus my presentation and my speech more towards the industry, the banking industry and the banking sector, and the key priorities of the banking sector in Cyprus. I'm delighted to be here to see so many colleagues. I like to thank the organizers and Logicom Solutions to share my views. First of all, I would like to stress the value of the banking sector, both for the growth of the Cyprus economy and the prosperity of the people in Cyprus. In the period 2016 and 2020, the banks in Cyprus provided a net lending of more than 14 billion euros to households and businesses to help them realize their lifetime or their business goals. During the hard period of the pandemic, the banking sector was there to support the country. The banks implemented the biggest per capita and the most prolonged program in Europe related to the suspension of installments, more than 11 billion euro, higher than 50% of the GDP of the country. It is therefore clear that success and growth of the Cyprus economy largely depends on the robustness of the banking sector. Some of you have already seen this slide, and this is very important when you look into the connectivity between banks and the Cyprus economy. While the economy is picking up following the pandemic, the ratings of the credit agencies regarding the banking sector are improving, but are still in non-investment grade. And this is very important. I'm talking to a lot of people and a lot of discussions around the issues of the banking industries. Some you can see here. One is a foreclosure framework, political discussions around how can banks foreclose into customers, into strategic defaulters. We are facing consumer protection laws, which are difficult for banks because they go back like for ages, and so on and so forth. I think we should not forget the investment grade rating of banks. That's an average, is non-investment grade, and I think this is something we need to overcome all together. Not only the banks, but also the politicians and other stakeholders who are involved in this. Because it's clear, banking and sovereign rating, and the sovereign rating of the country is still borderline investment grade, they are interlinked. And this implies that any deterioration of the banking sector rating might drag the economy to non-investment grade, but, and this is important from a positive angle, any improvement of the banking sector will affect the economy positively. So the challenges needs to be addressed, as I said, by politicians, and in particular, the coming elections. I think politicians should be clear about the role of banks in the Cyprus economy. So what needs to be done? I think Hellenic Bank strategy, but also, when I listen to Panikos, the strategy of all banks is basically to address the challenges of the industry in a cohesive way. Our strategy is based upon the strong capital and liquidity structure of our bank, and we concentrate our efforts, like others, on the improvement of our business model, our people, our services to clients, the development of our digital footprint, and the implementation of ESG DNA into the heart of our organization. Today, let me concentrate on two specific points which I believe will define the future sustainability of the banking sector in Cyprus. Number one is the issue of the cost-to-income ratio. As you can see on the left-hand side of this slide, the cost-to-income ratio of the Cypriot banking sector is moving towards 80%, and it is much higher than its peers in Europe. This endangers the long-term financial stability of the banking system, and at the same time makes it more vulnerable to the competition from abroad and other companies. This is serious. This is not sustainable. On the income side, yes, there are opportunities for growth, and this is where the banks need to focus. But these opportunities are limited given the capital restriction, the size of the market, and the intense competition amongst banks. The significant excess liquidity of the banking system, and you can see this on the right-hand slide, which presents the LCR, the so-called liquidity coverage ratio of banks, puts even more pressure on the income side, since Cypriot banks have to park excess liquidity with the ECB at a negative rate of 0.5%. And I do not believe that this will change soon. This is cost that banks have been absorbing since 2014 and is negatively affecting their P&L. This cost is over and above the cost for the bank levy and the cost for the deposit guarantee scheme, which safeguards our depositors. We will tackle this issue by offering alternative options to depositors, such as investment and insurance products. And very important, we as Hellenic Bank, we will also start applying liquidity fees not only on corporate deposits, but also on retail deposits, not only on new clients, but also on existing clients, above certain thresholds. Moving now on the cost side of the equation, and that's when I'm personally getting, wouldn't say frustrated, but looking into the cost side, we have to do something. Compared to the euro area, the population per credit institution, per branch and per bank employees in Cyprus is much lower than the euro area average. Let me give you one example. ABN AMRO, the second largest bank in the Netherlands with assets of more than 350 billion euro, much more than all Cypriot banks combined, has around and runs around 100 branches. And I think the direction is clear. There's an overriding need to further reduce the number of branches and bank employees and bank employees to make our banks more competitive. The cost related to staff and payroll is far too high. The cost is inflexible and often irreversible. That is why the involvement, and this is very important, and the constructive stance of the unions, and other stakeholders is extremely critical. In my view, the time of extensive pay rises as well as too generous exit schemes should be over. And I wish, and this is a message to my colleagues, and I wish that the banking industry in Cyprus stands united behind this direction. I would now like to focus towards becoming more customer-centric, to move to my second point, serving our customers. Banks have made progress towards becoming more customer-centric over the past few years. Yet, experience suggests there's still lots to do before we can consider ourselves truly customer-centric. During the pandemic, we witnessed a significant shift of our customers towards digital and alternative channels of banking. More than 80% of the volume of transactions are now executed through alternative channels. ATMs, web banking, and mobile apps are now becoming the main banking channels versus the traditional branches. This is very encouraging, but we still have a long way to go. We will use technology in our favor to sell products and services to further simplify procedures and processes and hence significantly improve the customer experience. I think every bank is going this way, and I'm very glad to see that we are all aligned in what we are doing here. It is simply unacceptable that it takes, more than 25 days, 20 days between a consumer loan application and final payout of the loan amount to the customer. This needs to change. We need to retain and upskill our staff and, most importantly, change the culture and mindset to cope with the increasingly demanding customer needs. This is the only way to reduce bureaucracy, speed up our KYC and customer onboarding, as well as improve our credit facilitation processes. We also need to support the agenda of the government, which basically tries to attract tech companies to come to Cyprus. When I speak to my friends and people I meet from Germany, from other countries, and they tell me, what burden it is, to open an account with a bank in Cyprus, this is unacceptable and this needs to change. And this has nothing to do with regulations around money laundering or KYC or whatsoever. It is just us, who are too difficult, who have implemented processes inside the banks, which need to change. We need to change. We need to train our people, and because someone is from another country or is running a software company or is selling products over Amazon, does not mean that this is a client which we should not onboard. This is very important, and this needs to change. I would also like to say a couple of things on a topic that lately gained a lot of hype: fintechs and the fact that they are competing against traditional banks. First, I think every fintechs as banks, we all have our place. Banks, however, are not becoming fintechs. Traditional banks are building from a very solid foundation. Banks can support their customers through credit facilities to achieve their lifetime goals. Most importantly, banks, which are heavily regulated entities, have deep experience in managing customers across their economic life cycles, and customers can be confident that the banks are doing the right thing to safeguard their money. Technology is reshaping almost every facet of our lives, and banking is no exception. That is why digitization in the banking sector is not an option but an imperative. Our banking sector needs to keep up to speed with the global developments. However, we shall not forget that the fundamental essence of banking is about trust, providing balance sheet, responsibility, and finally financing to the economy. Our lending approach regarding our household and business offering are progressively incorporating sustainability factors, obviously, and we wish to be at the forefront of the green transition and contribute to a more sustainable society. I think there is a lot of potential here for banks to really move towards and with the green agenda. It will provide for new business opportunities, lending opportunities, and new services to our clients. So before closing, let me summarize what I believe should be the key priorities for the banking industry in Cyprus. And I'd like you to, when you leave today, hopefully remind these through things. Firstly, we have to overcome limitations in this country to improve the credit situation of banks for the benefit of the whole economy and prosperity of the people. Second, we have to improve labor relations and at the same time ensure that labor cost development is aligned with the long-term sustainability of the sector. Maybe I should say mid-term sustainability of the sector as opposed to long-term sustainability of the sector. And the third point is we have to position the client and not bureaucracy in the center of what we do. Thank you very much.
Thank you very much, Mr. Gatsky, for your insightful presentation. And, we are moving to our next keynote speaker, Dr. Kirill Zimarin, CEO of RCB Bank.
Όλες οι μεγάλες επιτυχίες ξεκινούν από μια ιδέα.
Πάμε για ένα τετατέτ.
Η ανάπτυξη θέλει χώρο για συζητήσεις και δράσεις. Στην RCB Bank δεν βλέπουμε πελάτες, συναντάμε συνεργάτες. Ανταλλάσσουμε απόψεις για τις ανάγκες του μέλλοντος.
Η σημαία ψηλά.
Στηρίζουμε όσους διαπρέπουν στην οικονομία, τον πολιτισμό, τον αθλητισμό και το διάλογο για ένα καλύτερο αύριο. Η τραπεζική του αύριο στηρίζεται στις ιδέες του σήμερα. RCB Bank. Δημιουργούμε χώρο για τις δικές σας ιδέες.
Good morning. We decided to start with a video because very often banks are about to be serious. But banks are about life, are about people. And that's why I think that what I want to discuss with you and to share my view, how the bank should look like in this changing, vulnerable world. As the TV spot we just watched stated, all great successes start from an idea. Indeed, if one looks at the greatest achievements of mankind, those were achieved through two important elements, ideas and dialogue. At the same time, all the great failures of our species happened because we stopped talking, we stopped discussing. Banking, like life, is no different precisely because it's part of our everyday life. The everyday life of individuals and of companies and of corporations. And as we know, life can never be constant. It evolves and changes through the decades. Today we live in strange times that have accelerated what was already inevitable. We have for so many years now been talking about banking adjusting to the new digital age that the young generation has been driving for quite some time now. The pandemic, among other things, has been an unexpected force that moved our lives fast forward to this digital age. Everything from shopping to food and all everyday needs moved from physical to digital in a rather forceful and abrupt way. Banking was, of course, no exception. And if we want to be honest with ourselves, this unexpected force did find our industry not as prepared as it should be. We were talking a lot about this, but there are so many steps that should be done in this direction. There is no, now we're moving towards this new design and new composition of the industry. What you have seen on video, this is our new branch in Nicosia. That's a branch which is changing a little bit the perception of how it should like. Usually the bank was, let's say, isolated from the customer. You enter the bank, long counters, fortunately not bulletproof glasses, for sure bulletproof doors, and like a fortress, trying to show that we're ready to secure money of our customers. That was the message. The stronger the door, the better we secure the money of the customers. But customers are changing. Now you can have access to our services, for example, through, if we speak about RCB or any other Cypriot bank, it should be RCB online banking, RCB mobile banking. And we have to secure IT software. We don't have to secure the door. And that's why we have thinking how to change a space, how to be open to the customers, how to be more friendly to the customers. And we found out the solution that that is a new, not far from here in the corner of Makarios, the branch where you have sitting areas, you can see, coffee shop, just to see and to discuss things. The banks are open for discussion. It's a big change in the role model, let's call it like this, of the organization of the branch. Before, the banker was in the center and people were staying in a queue to ask for advice. Now the customer is in the center. And behind the scene, yes, we have staff, we have people who are working, who are ready to come to this customer area to help you, but customer is the center. His needs are vital for us. And this is a big modification of the perception of the branch. I hope that that will be spread. For sure, the era of branches is slowly passing away. But the branch is not only a place where you can see that the bank is still alive. The branch is a place where you can come and share ideas. The branch is a place where you can come and spend some time, because it's part of the city environment. It's not isolated from the city. It's not isolated from day-to-day life is part of the life. And by this, we call it RCB Nicosia Banking Center. We want to show that let's change the view on the banks, especially through this pandemic time when the social distancing, when we are all in masks, and that is true, but at the same time, we need more communication, we need more discussions, we need more ideas to be shared. And I think such points will change the perception of banks even in the society. It's not some, sorry for these fat cats, who are isolated by bulletproof doors and low and high counters. It's an industry which is open, which depends on the nation, and which depends on the people who are living in our country. That's why I think that we should think about bank like a place to implement ideas of young generation, of new business project, and that is the input, will be the input of the industry in the economy of Cyprus, in further improvement of the quality of life of people here. And I understand that this is a serious conference. We're discussing rates, P&L, that is the everyday life of any bank employee, of any banker, if you know such people. And at the end, I want to show one more video, how we are preparing some Christmas decorations for Limassol, for Nicosia. We're doing it regularly every year, just to show that bank is part of Limassol. We're based in Limassol. That's our home city. And we're based in all other cities of Cyprus. And our idea is that bank is not something separate. Bank is any bank, any Cypriot bank is part of Cyprus, is part of our day-to-day life. Thank you very much.
Thank you very much, Dr. Zimarin. Let's move to our next keynote presenter, Mr. Konstantinos Koutendakis, CEO of Alpha Bank Cyprus. Mr. Koutendakis, the floor is yours.
Thank you. It's working. Thank you and hello, everyone. First of all, I would like to thank the organizers for bringing us together in order to exchange views and share our experiences. I would like to focus my speech more on the need for banks to go ahead with their transformation, to lower their costs and to serve their customers better, and how can the fintech industry help in this direction. First of all, COVID-19 pandemic created challenging conditions that we haven't experienced before and presented us banks with yet another problem which created more volatility and uncertainty. Despite the challenging conditions, however, the banking sector has shown an astonishing ability to manage change required during the pandemic and proved to be remarkably resilient. Capital and liquidity have generally been strong across the industry. Despite our inflexible operating models, either due to legacy systems, the regulatory framework, or compliance issues, we managed to switch the majority of our employees to remote working quickly, and we were able to avoid disruption in our operations. We also managed to handle the demand and expectations of our customers successfully. And of course, we acted as pipelines for government economic stimulus packages related to the pandemic. Undoubtedly, the COVID-19 pandemic created challenging conditions that we haven't experienced before. But it also gave us the opportunity to take a step back and rethink our operating models, our transformation agendas, and our customers' needs. If you think about it, the pandemic was a live stress test for us. It allowed us to identify areas of weakness and helped us understand how we can increase efficiencies. Many of these issues were already in our view, for example, automation of processes, but the pandemic accelerated the need for action. The pandemic also gave us the opportunity to catch up with our digital transformation and innovation agendas, an area where non-traditional players have historically led. Most banks already had put in place their digital transformation plans. The pandemic, however, accelerated the need to implement them fast. It also highlighted a societal change which affects customer behavior. The number of physical interactions has decreased, and customers are increasingly accustomed to arranging their financial needs online, resulting in evolving customer expectations. The changing regulatory landscape and digitization are driving greater connectivity between organizations and reshaping the financial ecosystem. And within this emerging ecosystem, we need to reframe our future and accelerate our transformation plans, focusing on 4 major pillars. First, take a comprehensive approach to building resilient organizations that are agile and flexible to respond to risk when they occur. Second, improve our operating models and identify operational, structural, or strategic cost reduction opportunities. Third, increase customer centricity with better data analysis. We need to address increasing pressure from all customers, retail, SB, SME, or large corporates, to provide a more engaging, contextual, and frictionless experience, maintaining at the same time a complete financial trust, integrity, confidence, and transparency. Finally, we need to reassess the new financial services ecosystem that is emerging and decide how and where we will position ourselves. Customer behavior is evolving along with global developments, resulting in customers' increased willingness to use fintech services. The Fintech Adoption Index shows that the use of fintech services has increased globally from 15% in 2015 to 75% in 2019. This is supported by the increased number of fintechs that has more than doubled in the last 3 years, and the increased investment activity, which is expected to grow further in the following years, despite the small hiccup in 2020. It is worth noting that in just the first 6 months of 2021, investment activity reached almost $100 billion. Facts indicate that we appear to have entered a new phase in the evolution of the financial technology sector. Banks are now seeking to team up more with emerging technology companies to gain access to new markets and products. At the same time, many fintechs are looking for partnerships with banks to expand into new markets, gain industry and regulatory knowledge, or provide solutions that can help banks improve their productivity and efficiency. To advance collaboration, banks and fintechs need to be more open-minded, tolerant, and accommodating, and understand the mutual need for coexistence and codependency. Fintech companies can benefit from a collaboration with banks because banks generally have a more well-defined and stable client base. Banks also tend to have bigger investment budgets that can provide a flow of capital to further develop fintech services. They also have a lot of internal know-how and knowledge in areas that fintechs can benefit from, such as legal, regulatory compliance, and risk management. Finally, collaboration with banks confirms the credibility of these fintech services to the customer. Banks also have to gain from this collaboration with fintechs because customers have become increasingly used to seamless digital experiences and expect the same from their bank. Is the collaboration, however, easy? One of the biggest challenges is the gap between fintech's innovative and entrepreneurial mindset and way of working versus the risk-averse and traditional culture of the banks. Both sides must adapt and evolve. Banks should become more efficient and quicker in adopting fintech innovative solutions. Due to inflexible legacy systems and extensive regulations, banks are slow responders to innovation. Fintechs need to spur innovation in a regulated manner. Adoption of policy tools will help them to develop their innovative ideas at a risk-free environment and before going into production. Fintech should move from the nice-to-have or cool ideas to clear value propositions with quantifiable KPIs. Fintechs need to provide evidence of their ability to deliver on their pitch, in other words, to deliver their ideas and, more importantly, to deliver them on a timely manner in order for the innovation not to become obsolete. It is not uncommon to have long timelines, more than 18 months, for developing a proof of concept from lab to live, which is a constraining factor for fintech companies. At Alpha Bank, we recognize the need for collaboration. We actively work with the fintech community. We have developed an international digital innovation program, FinQuest by Alpha Bank, which enables innovative proposals and make the fintech community part of the industry's transformation. This program aims to act as an accelerator of innovative ideas by allowing participants to develop and test solutions with the bank's business unit, provides advice and delivers workshops and other value-adding interactions regarding financing opportunities, prepares fast-paced paths and guidance for pitching innovative ideas for funding, supports with networking and in particular connecting participants with Alpha Bank executives and industry experts. FinQuest by Alpha Bank has been running for a few years now and is open to fintechs at any part of the world. Some of our success stories include Wealthyhood, a UK-based fintech, which offers an open banking wealth management solution through a personalized and commission-free wealth management app. Thinkware, a Romanian-based fintech, which is a cloud-based, custom-built platform for open banking, offering an off-the-shelf solution for real-time treasury. And finally, Finloop, a Greek-based fintech, which offers a software platform that enables point-of-service microloans by bringing machine learning and open banking together. All three cases have won prizes at FinQuest and managed to obtain funding from investors of more than 2 million. This year's FinQuest edition opened on December 3rd and will be open until January 14th. It will be looking to attract applications in innovative B2B and B2C solutions that exploit open banking data and functionalities to offer an improved experience for our clients, embedded services for our partners, or new services that can be monetized. Also, innovative solutions that will play a key role in building a sustainable future through data analytics and reporting solutions for benchmarking, profiling, and scoring of corporate clients and partners. And to conclude, I think it is safe to say that the relationship between banks and fintechs will continue to evolve, and very likely at an accelerated pace, as fintechs continue to drive innovation in the financial services sector, and banks need fintechs to accelerate their digital transformation. I think there is room for everyone in this emerging ecosystem, and collaboration between banks and fintechs is a win-win situation. Thank you all for your time.
Thank you very much, Mr. Kourendakis. Let's swiftly move to our first panel discussion. I call to the stage Mr. Michalis Stefanou, partner in advisory in charge of banking from PwC in Cyprus.
Thank you, Mr. Chairman. Today I have the honor to be moderating a very exciting session with Mr. Konstantinos Herodotou, Governor of the Central Bank of Cyprus, and Mr. Luis de Guindos, Vice President of the European Central Bank. At this stage, I would like to welcome on stage Mr. Konstantinos Herodotou, who has extended an invitation to Mr. de Guindos, and I would like to give him the opportunity to welcome our special guest.
Thank you, Michali. I would like to thank Luis again for accepting my invitation to participate at today's conference and share his insights with us. Luis has unique experience at European and global level, being among many other important posts he has held. Minister of Economy of Spain from 2011 to 2018, and Vice Chair of the European Central Bank since 2018. But beyond Luis's credentials and experience, let me also say that Luis's insights are fundamental and immensely valuable at the discussions we have at the Governing Council of the European Central Bank. But Luis has also very kindly always shared his wisdom, advice, and Luis, I will add, a good sense of humor in side discussions that the two of us have during the meetings in Frankfurt, for which I consider myself lucky and privileged. Vice Chairman, dear Luis, thank you once again, and the floor is yours.
Well, good morning, everyone. Thank you very much, Konstantinos, for your very kind words. It's a pleasure to be here with you. Even, fortunately, we cannot do it physically, but I think that, this is a very interesting conference, and, it's a pleasure for me, to participate here. And thank you very much for your invitation, perfectly. That, we have had a lot of, internal chats, bilateral chats in the past, and I think that your contributions to the Governing Council of the ECB have always been, extremely positive and extremely interesting, because you have a deep knowledge of markets, of financial markets, that I think that this is one of your main contributions to the discussion, the important discussions that we have in the Governing Council of the ECB. So. Let me underline again that it's a pleasure to be here with you, and thank you very much, dear Konstantinos, for this invitation. In my remarks today, I will sketch out the current economic situation in the euro area and focus on the key short and medium-term risks to the stability of the financial system. Over the summer, we saw a strong recovery, much stronger than many had expected. But following a strong rebound in the third quarter, euro area activity has slowed in the last quarter of this year, mostly due to global and domestic supply bottlenecks and energy price increases. Supply bottlenecks related to shortages of equipment and material have caused a lack of intermediate inputs to the production of manufactured goods and delays in construction activities. High energy prices could reduce consumer income and firms' ability to withstand higher costs, in turn lower consumer and investment spending. The current phase of higher inflation could last longer than expected only some months ago. Headline inflation increased by 4.9% in November. The recent increases were dominated by energy inflation, but also headline excluding energy and food contributed markedly. I have to stress here that energy inflation accounted for more than 50% of headline inflation. So far, there is no evidence of second-round effects from higher inflation outcomes to wages and back to prices. But wage growth is expected to be higher in 2022 than in 2021. And we have to bear in mind that it's very important to stay vigilant with respect to the evolution of wages and the wage bargaining process that was postponed from 2020 because of the pandemic, and now it's going to be concentrated at the end of this year and the beginning of next year. At the same time, the recent pandemic surge has led to increasing restrictions across the euro area countries. While successful vaccination campaigns, together with increasing booster shots, should alleviate the situation, renewed stringency measures could weigh on contact-intensive sectors. And simultaneously, the appearance, the surge of a new variant is another element of concern and of uncertainty, as you perfectly know. I do not think that this will derail the overall recovery. Growth factors are quite strong over the medium term. The main reason for the bottlenecks is strong demand. Supply-side disruptions do not diminish growth potential. They shift activity over time. We might see some growth deceleration in the short run, but then a continued strong recovery in the medium term. Our financial stability assessment reflects this intertemporal trade-off. Risks to financial stability have abated in the near term on the back of the economic recovery. Pandemic-related risks appear to be receding, with corporates, sovereigns, and banks all avoiding tail risk outcomes. But financial stability vulnerabilities have increased in the medium term. One of the legacies of the great lockdown was an increase of public and private sector debt, as well as a surge in house prices. Continued signs of a stretch in financial markets and increased risk-taking by the non-bank financial sector are other vulnerabilities building up. A scenario of higher inflation and lower growth could pose new challenges for financial stability, especially if it were to widen the gap between interest rates and growth, and to threaten debt sustainability. Fiscal, monetary, and prudential support measures have helped stabilize corporate liquidity and debt sustainability during the pandemic. The quick reactions of public authorities have laid the foundation for favorable financing conditions and improving profits in the non-financial corporate sector, keeping euro area insolvencies 15% below pre-pandemic levels. However, high corporate indebtedness and the continuing fragility of certain sectors that were more exposed to pandemic restrictions carry risks to corporate debt sustainability in these sectors. Government intervention played a crucial role in shielding the financial system from large spillovers due to pandemic restrictions, but has left sovereign debt at historically high levels, just below 100% of GDP. Although governments were able to obtain financing at low interest rates and increased the maturity of their debt, a shock to financing costs and economic growth could make market participants reassess sovereign risk, particularly in higher debt countries, and lead to economic and financial fragmentation across the euro area. These corporate and sovereign vulnerabilities warrant gradual phase-out of policy support. Many fiscal and other support measures, such as moratoria, tax deferrals, short-time working schemes, and loan guarantees, have already expired or are set to expire towards the end of 2021. The remaining measures have become more targeted, focusing on solvency support for viable firms rather than broad-based liquidity support. After dropping by more than 40% in the early stages of the pandemic, euro area bank stock prices, as well as price-book ratios, have recovered back to levels of early 2020. Apart from the improved economic outlook, lifting of restrictions on dividends led to expectation of a bumper year, not only for dividend payments, but also for equity buybacks. Waves of corporate loan defaults didn't materialize, and banks released prudential provisions from 2020, revising the risky loans back to a more benign credit risk assessment. In line with better than expected corporate solvency, financial markets continued to rebound from the pandemic, boosting investment banking revenues. Both factors contributed to growth in bank profitability of 5.2% in the second quarter of 2021, compared with only 1.3% at the end of 2020. This improvement was, however, heterogeneous across euro area banks, and profitability levels remain structurally lower than in some parts of the world. Low cost efficiency, limited revenue diversification, overcapacity and compressed margins in a low interest rate environment look set to hamper bank profitability in the long term. Euro area banks also face the need to act with increasing urgency to manage the implications of the green transition and to meet digital transformation needs. Consolidation through mergers and acquisitions could be one potential avenue for helping the sector return to more sustainable levels of profitability. Demand for housing, moving to the housing sector, was high throughout the pandemic, given protected employment and incomes, higher savings, and easy financing conditions. The result was that the euro area house prices grew by 7.3% in the second quarter of 2021, the fastest pace since 2005. Data on securitized loans showed a notable increase in high loan-to-income and loan-to-value mortgages, mitigated, however, by very low actual debt servicing costs. Signs of easing credit standards warrant close monitoring in the future. The dynamics in residential real estate prices with accelerated mortgage lending tended to be most pronounced in countries where valuations were already stretched prior to the pandemic. Apart from the structural shifts in housing preferences during the pandemic, these dynamics were also driven by the historically low financing conditions and search for yield behavior. As the first line of defense, macroprudential policy is the instrument of choice to address the elevated and rising financial stability vulnerabilities we observe in some countries. The timely application of macroprudential policies will allow a further build-up of resilience and limit the accumulation of risks. At the broader regulatory level, the full and consistent implementation of the final leg of Basel III reforms remains a key policy priority in safeguarding the resilience of the banking sector. At the same time, the challenges of digitalization and the implications of climate change accelerate in urgency and require timely action. Exuberance has continued in financial markets during the pandemic. Search for yield has led to tight spreads in the corporate bond markets and high price-to-earnings ratios in equity markets. Alternative assets such as Bitcoin and various types of stablecoin have also been here beneficiaries. With respect to non-banks, this was the sector most exposed to the exuberance in financial markets. There have been concerns for some time about the growing exposure of the investment fund sector to credit, duration, and liquidity risks. Vulnerabilities continued rising and are even larger currently than they were before the pandemic. Holdings of BBB and sub-investment grade bonds represented more than half of investment fund portfolios. While this means that the sector had become an important source of real economic finance, low liquidity buffers mean it could yet prove fragile. Strengthening the regulatory framework for non-banks needs to be pursued to enhance the long-term resilience of the financial system. Let me conclude. A strong, sustained, and broad-based recovery is at the center of our policy concerns. Apart from the demand shock induced by the pandemic, protracted supply-side disruptions and rising energy prices are posing risks for both the inflation and growth outlooks. Coupled with rising inflation, if the economic recovery loses momentum, or should it come to a halt, the medium-term vulnerabilities I mentioned before could be brought forward and crystallized in the near term. We have to remain patient and focused on the medium term, thereby allowing conditions in the economy to normalize and to bring inflation to our medium-term target. It is essential to maintain the momentum of the recovery and avoid scenarios that could put our price stability objective in jeopardy. Thank you very much.
Thank you, Mr. De Guindos. Very insightful speech and very clear articulation of the risks to the financial sector, not least as a result of COVID-related disruption. Mr. Rodou, may I ask you to proceed with your own speech?
Good morning, everybody. I'll focus more on fintech evolution in the banking system and managing the consequent risks. The pandemic has highlighted the importance that technology plays in allowing the financial system to continue as smoothly as possible with its operations. Global fintech investment continued its remarkable growth, rising from $87 billion in the second half of 2020 to $98 billion in the first half of 2021. Global fintech deal volume also hit a new record of almost 2,500 during the first half of 2021. Data also shows that consumers worldwide are adopting fintech services much more quickly than anticipated. I think Mr. Kourtentakis mentioned the numbers, but back in 2017, it was predicted that 52% of consumers worldwide would have adopted fintech services by 2019, but the estimate proved to be too conservative, as the actual figure overshot by 12 points. This overshooting happened before the pandemic. Although data is not yet available, the recent health crisis must have accelerated further this figure. The growth in the fintech market is also obvious from the number of fintech startups. As of November 21, there were 10,755 fintech startups in the Americas, making it the region with the most fintech startups globally. In comparison, there were 9,323 such startups in Europe, Middle East, and Africa, and 6,268 in the Asia-Pacific region. Just to give you some local numbers, Cyprus is no exception to this global trend. There are currently 14 authorized electronic money institutions and 10 authorized payment institutions, while we have 43 pending applications at the central bank, 32 for EMIs and 11 for PIs. Compare this with 12 local and foreign authorized banks and subsidiaries in our country. Let me go back to the global and European level. All these revolutions, these global developments come with costs and risks. The number of cyber incidents reported to the ECB banking supervision in 2020 increased by 54% compared to 2019. Banks are specifically targeted. Banks underwent almost 26% of cyber crimes in 2019. This included compromised credit cards, leaked credentials, and malicious banking applications. The euro area banking sector is undergoing a transformation with higher competition from non-bank financial intermediaries and fintech solutions. The euro area's financial structure has seen a movement from strong bank dominance towards a more balanced composition. The development of non-bank lending diversifies the sources of finance available to businesses, providing competition to the banking sector. As a result, credit institutions need to adapt to the unfolding competitive landscape. The ongoing digitization of society at large, coupled with the changes in the way people work and conduct their purchases because of the pandemic, forced the banking sector to adapt to a new way of conducting business. In addition, the low profitability challenge that European banks face exacerbates the need to adjust and acts as a catalyst for the already strong competition banks are experiencing from fintech and the non-bank financial intermediation firms. Fintech institutions operate on a very different business model compared to traditional banks, and as such, they have a competitive advantage in terms of cost structure and overheads. Their cost advantage and speed of operational and business decision-making is evident by their rapid expansion and their proven ability to grow their user base quickly. However, although fintech bring obvious benefits to users, up until recently, we haven't seen large defections of customers from traditional banks to these new players. The confidence to the incumbent banking structure, together with the value that people place on their existing bank relationships, provide the opportunity for an adjustment period for incumbents. Having said that, generational differences matter. Consumers aged 25 to 40 years, which is the generation known as Generation Y, have had the biggest effect on digitization of financial services. Generation Y account for almost 50% of mobile banking users. Based on this trend, banks can expect Generation Z, ages up to 24 years, to be even more engaged in digital banking and technology-driven solutions. In contrast, Generation X, the baby boomers, still see value in live communication and visiting physical bank branches. These younger consumers look for alternative ways of processing their financial transactions that are simpler and faster. The banking system needs to adapt accordingly. Incumbent banks that work with dated technologies and overextended branch networks are likely to lose their competitive edge. Technological innovation is the way to increase efficiency as a result of new competitors entering the market and new generations being more reliant on technology. Since the global financial crisis, the euro area banking sector has been going through a gradual restructuring process, which involves the search for new business models, the adjustment to the revised regulatory regime, consolidation, and the resolution of non-performing assets. In fact, in 2020, the number of completed mergers and acquisitions in the banking euro area increased, even though this type of M&A had been decreasing since 2010. In an effort to further contain costs and consolidate the banking sector, the number of euro area banks and branches has continuously declined by approximately 30% since 2008. Incumbent banks must restructure and improve on technology and efficiency simultaneously with the entry of new competition also from big tech, Google, Facebook, Amazon. Technology giants are entering financial services as their next related business. Global technology giants have built extraordinary market advantages: large and engaged consumer network, huge data enabling robust and increasingly precise understanding of individual customers, experience in scaling innovative technologies, and because of their size, they have access to low cost of capital. Big tech players have already gained a foothold in financial services in select domains such as payments, and in some cases, lending and insurance. However, digitization also poses significant financial and operational risks, both for the banks and fintech, big tech companies themselves. The Financial Stability Board has recognized a number of operational risks, including operational risks of third-party reliance that are transferred to banks. Usage of services such as cloud computing increase the interdependence of banks to third-party providers and consequently increase operational risk. Therefore, the banking system is becoming increasingly more vulnerable to operational incidents at third-party service providers. The reliance of banks on digital platforms for the marketing and distribution of financial services is creating new forms of reputational interdependencies within the EU's banking and payment sector. Furthermore, excessive reliance on automation and IT might increase the challenges of KYC procedures and offer new scope for money laundering. Cyber risk can be further exacerbated in the case of unsupervised parallel payment systems and rising interconnectedness between application interfaces, such as smartphone payments. Further financial risks include the robustness of the business models of fintech companies, which has not been tested fully yet. In fact, the Financial Stability Board has noticed several high-profile failures among fintech platforms, such as the Lending Club in the US and the Trust Buddy in Sweden. Also, the evolution of big tech companies and the risk of becoming too big to fail can be another source of systemic financial risk. A malfunction at a systemically important big tech company could bring down key services across multiple banks and countries. The above risks translate directly to financial stability threats. The transmission of any of the above risks to one institution could be immediate to other institutions or sectors as a whole. This systemic risk should be tackled by authorities. Macroprudential authorities should coordinate their actions in order to mitigate these risks and seek ways to balance the protection of customers' interests and financial institution risk with specific policy objectives and a level playing field being one among them. The initiatives taken by the European Commission, such as the Digital Finance Package that captures, among others, the proposal for Digital Operational Resilience Act, known as DORA, and the revision of the Second Payment Services Directive are steps towards mitigating these identified risks. The increasing number of cyber attacks in Europe indicates that a lot more needs to be done in that space. The growth of the fintech sector has raised the need for regulators to adjust their role with the within the perimeter of prudential regulation. Extending the perimeter of bank regulation to all financial service providers could possibly constrain financial innovation. On the other hand, keeping the new entrants completely out of the perimeter would tilt the playing field in their favor and leave consumers unprotected. A balance must be found to allow the regulatory perimeter to cover all activities that have systemic risk potential while allowing for innovation. Finally, data protection is important in order to safeguard the confidence in the banking sector. As a result, cybersecurity should be further enhanced and prioritized, and cyber risk incidents need to be included in financial institutions' business continuity and disaster recovery plans and be tested frequently. Finally, given the cross-border activities of fintech and big tech, authorities across jurisdictions should cooperate in regulating them. Thank you very much for your attention.
Thank you, Governor Herodotou. The points you have mentioned about the risks and opportunities that the evolution of fintechs present for Cypriot banks need to be taken very seriously. For the remaining time of this session, I will be asking a couple of questions to you. I will start with Vice President Egindos. Within the mandate of the ECB is obviously to maintain financial stability and price stability within the Eurozone. You mentioned the risks that rising inflation and the COVID-related disruption pose for the European economies. So how worried are you that there will be a spillover effect on the corporate and sovereign debt and eventually in the financial sector? And is the ECB once more prepared to take any action that is needed to contain these risks?
Well, thank you very much for the question. For sure that one of the main targets that we have put forward during the pandemic is to maintain very favorable financing conditions, and I think that this has been a success in terms of avoiding some tail risks that were quite evident at the beginning of the pandemic. For instance, one of the main risks at the beginning of the pandemic, when the pandemic started 20 months ago, more or less, was the possibility of having a wave of insolvencies. This didn't happen. And this didn't happen because of the support measures put in place by the governments, for instance, public guarantee schemes, for longer schemes, and simultaneously by the ECB in terms of monetary policy and prudential policies. So we avoided what it could be a very, let's say, detrimental nexus between corporates, banks, and sovereigns, and this makes a difference, with respect to what happened, in the previous crisis. So we are ready. We have, a primary mandate that is price stability, and simultaneously, financial stability is a precondition for price stability, and price stability as well is, a necessary condition for financial stability. With respect to the evolution of inflation, well, inflation has been on the rise. Everybody has underestimated inflation in 2021. It has to do mainly with, the evolution of energy costs. We are fully convinced that inflation will start to decline at the beginning of next year, and that in the second half of next year, inflation will start to decelerate even more, and will converge to our target of 2%. Nevertheless, perhaps the existence of some bottlenecks, some supply side issues that are becoming more persistent will give rise to a decline in inflation that will be not as quickly and as rapid as we forecast only some months ago. And perhaps, the convergence towards the 2% target will take a little bit longer. But no doubt that the inflation will decelerate in 2022. And it's very important to avoid second round effects. This is one of the messages that we want to convey, to avoid a sort of a spiral between wages and prices is going to be key. Nevertheless, as we have indicated in the past, now inflation, the risks to the inflation outlook are moderately tilted to the upside.
Thank you very much. So overall, a positive view, but yes, it may take a bit longer to return to full normalcy. Governor Herodotou, slightly different topic. NPLs have been among the most important issues for Cypriot banks for some time. Over the last few years, there has been significant reduction in the NPLs in the system as a result of organic activity from Cypriot banks with the help of the regulator, obviously, and the number of transactions that have been concluded. There is still a significant amount of NPLs in the system, though, so how do you think we should approach it to deal with it at a holistic level? And how worried are you for the fact that a significant amount of NPLs maybe are not within the banking system, but are still within the Cypriot economy?
Thank you. The reduction of NPLs in the banking sector happened through organic measures like restructurings and write-downs and the asset swaps, but also through sales to credit acquiring companies. But as you rightly say, those sales, it means that those non-performing loans are still within the economy. Firstly, let's look on a few positive points. There are a number of economic studies that indicate that a high level of non-performing loans in a country directly impacts the country's GDP. And this is because banks, the managements of banks focus on the NPLs rather than their core business, which is providing financial services and products to the SMEs and the households, which is the driver of the economy. So the more we see NPLs moving out of the banking system, we should expect this to have a positive impact on the banks themselves and therefore on the GDP of the country. They do stay in the system, but this is also why we need to see either further restructurings through the proper application of the code of conduct of the central bank by the credit acquiring companies or the servicers, but also in the cases where loans are terminated, we need to see a solution there as well that is mutually beneficial to the loan holder and to the credit acquiring companies. Because another element of the composition of non-performing loans are the terminated loans, meaning that they are loans that the two sides have not managed to reach a conclusion on. So there's still a lot to do, but at least from the banking side, regulation is very clear in terms of the provisions that need to be set against non-performing loans in order to make sure that the bank balance sheets are healthy.
Thank you very much. Vice President Gindos, ESG is among the new challenges that banks and financial sector are faced with. ESG is not just about achieving carbon neutral footprint. It's about addressing this matter comprehensively. So how high is ESG on the ECB's agenda, and what's your view about the stage at which banks have progressed in that front?
Well, climate change is one of the main challenges for the humanity over the next decades. That's quite clear. So in that respect, starting with the principle that the first line of defense in order to fight climate change is in the hands of the governments. Well, I think that central banks we have to make a contribution that is, let's say, polyedric. First of all, we have to take into consideration the impact of climate change and the policies to fight climate change in our models in terms of inflation, in terms of growth. Second, we have to take into consideration as well that climate change and environmental issues are very important for our purchases. We have a program that perfectly buys corporates, and we have to take into consideration the exposure of these corporates to climate change. And finally, in terms of financial stability and supervision, banks are going to confront transition risks, physical risks, and we have to assess those risks. And we have to make sure that banks are ready in order to deal with those situations. We carried out a sort of climate stress test, a top-down exercise recently, and the conclusion was quite evident. The sooner we start acting against climate change, the better in the medium term. In a 20-year horizon, it's much better. The benefits outweigh, the potential costs of these policies to fight climate change. And simultaneously, in terms of supervision, now the SSM, the supervisory part of the ECB, is implementing, a sort of bottom-up stress test, analyzing the exposures of the different banks to, climate risks, both transition and physical risks. And this is going to be important. And I think that, the main conclusion is that action is required, that perhaps, the banking industry is lagging behind what is needed. And this is something that, we are going to put a lot of attention to, and we will become vigilant in order to avoid any sort of delay in that, precious target that is the fight against climate change.
Very clear message, high on the ECB's agenda, and we need to act fast. Governor Rodou, a final question to you. Consolidation is among the tools that banks have to improve their profitability, achieve synergies, and close the gap between actual returns and cost of capital. How do you see the possibility for further consolidation in the Cypriot market, and how about cross-border consolidation that may involve Cypriot banks?
Well, thank you. Firstly, let me say that this is something that we also discuss in Frankfurt through financial stability, but also at the ESRB. Europe is overbanked. We have seen a decrease already at the European level in the number of banks, but more needs to be done. But from a regulatory perspective, I think our role is firstly to ensure that the regulation provides transparency to facilitate M&A, whether it's domestic or cross-border, and secondly, a level playing field. In other words, the application of regulation should be the same to all banks regardless of size. Otherwise, you give some sort of an advantage to different types of banks. And then the third part, again from a regulatory perspective, would be to examine what the final result is. So if a merger takes place, it's our duty then to scrutinize what the resulting business plan is and whether it's viable, and what the resulting balance sheet is and the ratios and whether those are acceptable. And I think this is what the regulatory approach would be as regards consolidation and M&A.
Very useful. So clear message, transparency, need for a good assessment of what the end product of this will be and level playing field. Gentlemen, Vice President De Guindos, Governor Rodou, thank you very much for honoring the conference today with your presence. Hope everybody found the session as insightful as I did. Thank you everyone for staying with us. Chairman Grigioti, back to you for the rest of the session.
Thank you very much, Mr. Stefanou. Thank you, Governor Rodou. Thank you, Mr. De Guindos, for the very insightful positioning. We move now to a short coffee break until 11:30, and we'll see you back here in about 15 minutes. Thank you.
In the region to implement a digital transformation agenda that enables organizations to always stay relevant, while partnerships with the largest technology vendors and consulting firms in the world like Cisco, Accenture, Microsoft, and Dell Technologies help transform ideas into digital businesses. The Business Consulting Services Unit provides high-quality value, adding advisory services that evolve around building a digital future for businesses and identifies growth opportunities with a data-first model. Business Consulting Services Unit helps organizations identify and unlock new sources of economic value and achieve step function improvements in productivity, flexibility, and speed. The Business Solutions Services Unit offers sustainable software solutions designed to reinvent the business application portfolio in the areas of digital workplace portals, customer experience and mobility, analytics, blockchain, customer relationship management, and enterprise resources planning. The Technology Solutions and Services Business Unit delivers cutting-edge ICT infrastructure in the areas of data centers and business continuity, security, collaboration, network, cloud, and IoT. Logicom Solutions is a certified Cisco Gold partner and has successfully implemented and currently maintains the ICT infrastructure of several organizations across multiple industries. Logicom Solutions offers a complete solution in reaching your full digital potential, including your company's culture and digital training, to solving organization challenges and providing a complete infrastructure overhaul to maximize your capabilities. Logicom Solutions, your trusted digital transformation partner.
It never stops. Constantly moving, changing, evolving, always searching for a better place to grow, expressing itself through all avenues, shaping our past, where we came from, our roots, the present, and ultimately our future. Some say it talks, others say it makes the world go round. But in truth, it has taken us beyond our own planet. As the days go by, emerging technologies are rapidly connecting all aspects of our lives and industry together, making the world an even smaller place. It's not just our responsibility, it's our passion, our knowledge and expertise. We make sure that our DNA is part of its evolution, part of its identity and protection, part of our industry's future. EcomBX. With us, the future is today.
InfoCredit Group, a leading provider of compliance and risk solutions for more than 45 years, empowers businesses with a sophisticated suite of AML and KYC tools, which can assist you to mitigate risk and meet your compliance challenges and regulatory requirements. Our solutions vary from prior to client onboarding and all throughout the life cycle of your business relationship with your client. LexisNexis work compliance data through which you can screen against sanctions, PEPs, and media, automate your procedures and reduce false positives so to proceed to onboarding with confidence. Risk-based approach tools to categorize clients based on their risk and know when to apply appropriate due diligence. ID and passport verification, as well as AML consulting, manuals and legal solutions to be sure you are up to date and in compliance with all regulations and directives. InfoCredit Group is a strategic partner of the leading risk management and data analytics LexisNexis Risk Solutions, with representation in Cyprus, Greece, Malta, Romania, Russia, and the UAE.
Two brothers with a taste for adventure who set out to have a positive impact on the world by developing unique compliance solutions. Their mission? To fight global crime, providing the weapons to fight crimes directly related to money laundering, human trafficking, drug trafficking, organized crime, and terrorism. Helping desperate compliance officers protect their organizations with a compliance software platform like no other. The result? RegTech Platform, a regulatory technology platform, an end-to-end KYC and AML solution which delivers tools that minimize your risk exposure and help you in the fight against money laundering with facial recognition technology, document verification technology, negative list screening for exposing sanctions-listed people and politically exposed people, risk categorization, transaction monitoring. This platform is now being used to protect organizations with hundreds of thousands of clients around the world. A complete shield against money laundering, from onboarding to KYC to ongoing monitoring of the client, giving you, the compliance officer, the most effective weapons to fight crime, bringing peace of mind and changing the world for the better. Over the years, we may have grown, but we're still doing exactly what we set out to do, having a positive impact on our world.
Linux containers let you package applications with their necessary dependencies to simplify application deployment and speed delivery. But securely delivering and maintaining container-based apps at scale can be complex. That's where we come in. Containers rely on Linux, and no one knows more about Linux than Red Hat. We're active in open source container communities and the second largest contributor to the Docker and Kubernetes projects. With containers, as with everything in IT, security is your largest concern. To keep your containers safe from one another, we use isolation technologies like SE Linux. To make sure you can trust each container you choose, we offer a collection of source images that are continuously scanned, monitored, and updated. And to keep your environment safe, we provide tooling to inspect and approve containers as they move from development to production. Standardization and consistency create a common foundation that leads to greater application portability. We work with the Open Container Initiative and the Cloud Native Computing Foundation to help set and promote shared standards. And infrastructure consistency means you can confidently deploy and maintain container-based applications anywhere, from bare metal to cloud environments. When you're ready to scale, Red Hat's container platform gives you the architectures, tools, and processes to help you streamline container creation, deployment, and orchestration workflows. This means you can maintain, update, and patch containers continuously. Our tools help you manage it all, no matter where your infrastructure is going, and the documentation, services, and expertise to get you there, whether you need lots of help or just a little advice. Ready to get started? Visit redhat.com/containers.
Τα προσωπικά σας αντικείμενα είναι μικρά, αλλά πολύτιμα. Ασφαλίστε τα με το Alpha Feel Safe. Καλύπτει απώλεια ή κλοπή μόνο με 30 ευρώ το χρόνο. Από την Alpha Bank, σε συνεργασία με την Altius Insurance. Η ζωή πάντα προχωράει με στόχους, όνειρα, σχέδια. Με το Α προσωπικό δάνειο σε χαμηλή μηνιαία δόση, η Alpha Bank σας βοηθάει να ικανοποιήσετε όλες σας τις ανάγκες και να φτιάξετε τη δική σας ζωή. Α αυτοκίνητο με χαμηλή μηνιαία δόση και έγκριση σε 24 ώρες. Και για αυτοκίνητο
υπάρχει μια δόση που ο καθής μπορεί να δώσει.
Από την Alpha Bank. Αλφα επιχειρηματικά δάνεια. Ένα σύστημα από εξειδικευμένες καλύψεις και δάνειο εξοπλισμού για να αναπτύξετε με σιγουριά την επιχείρησή σας.
Για ανάπτυξη στην επιχείρηση, θες Αλφα μεταχείριση.
Αλφα επιχειρηματικά δάνεια. Ένα σύστημα από εξειδικευμένες καλύψεις και δάνειο επαγγελματικού ακινήτου για να αναπτύξετε με σιγουριά την επιχείρησή σας.
Για ανάπτυξη στην επιχείρηση, θες Αλφα μεταχείριση.
Για τις αγορές σας σε υπεραγορές, φούρνους και ζαχαροπλαστεία, τώρα επιστροφή μετρητών 4% από τις κάρτες Alpha Bank μέχρι τις 31 Ιανουαρίου από την Alpha Bank.
σημαντική ιστορία, βάζουμε πλώρη για νέες επιτυχίες. Για μας, την Κύπρο και τους ανθρώπους της. RCB Bank. 25 χρόνια στην Κύπρο.
What is return on investment? It's the benefit to the investor resulting from an investment. It's how much you get for how much you give. So, how much do you get when you invest in Cyprus? You get a high-potential, dynamically growing economy. You get a modern and attractive tax and legal system. You get high-quality professional services, highly qualified and multilingual personnel. You get location, location, location. But you also get a lot more. A kind of return on your investment that's harder to find in other destinations you might be considering. You get a safe place to relocate yourself, your employees, your business. The crime rate in Cyprus is one of the lowest in the world. A sunny place. Cyprus's Mediterranean climate means you can enjoy almost 300 days of sunshine per year. A diverse place. You can enjoy the beauty of the beach and the serenity of the mountains with just a 30-minute drive. Cultured place. You can enjoy 12,000 years of history through museums, archaeological sites, and religious sites. You can enjoy classical and modern art performances, sports of all sorts, an active lifestyle, and so much more. There is never a dull moment, unless, of course, you simply want to tone it down and relax, which you can also do in a variety of resorts, nature excursions, or small picturesque villages. You get a country that's great for kids and families. There are more than 90 high-level international schools, a plethora of parks, playgrounds, and year-round family events. You thought you couldn't have the best of both worlds. In Cyprus, you can. A country that's exceptional for business and ideal for living. A country where your real return on investment lies not only in numbers, but also in the quality of life that you, your family, and business associates will enjoy. Your investment will yield long-term business returns and unique personal rewards. It's time to redefine your return on investment. It's time to invest in Cyprus.
Digital disruption. It's a new world, and organizations must think in innovative ways to stay ahead. This is where Logicom Solutions comes in. Logicom Solutions works with the largest organizations in the region to implement a digital transformation agenda that enables organizations to always stay relevant, while partnerships with the largest technology vendors and consulting firms in the world like Cisco, Accenture, Microsoft, and Dell Technologies help transform ideas into digital businesses. The Business Consulting Services Unit provides high-quality value, adding advisory services that evolve around building a digital future for businesses and identifies growth opportunities with a data-first model. Business Consulting Services Unit helps organizations identify and unlock new sources of economic value and achieve step function improvements in productivity, flexibility, and speed. The Business Solutions Services Unit offers sustainable software solutions designed to reinvent the business application portfolio in the areas of digital workplace portals, customer experience and mobility, analytics, blockchain, customer relationship management, and enterprise resources planning. The Technology Solutions and Services Business Unit delivers cutting-edge ICT infrastructure in the areas of data centers and business continuity, security, collaboration, network, cloud, and IoT. Logicom Solutions is a certified Cisco Gold partner and has successfully implemented and currently maintains the ICT infrastructure of several organizations across multiple industries. Logicom Solutions offers a complete solution in reaching your full digital potential, including your company's culture and digital training, to solving organization challenges and providing a complete infrastructure overhaul to maximize your capabilities. Logicom Solutions, your trusted digital transformation partner.
It never stops. Constantly moving, changing, evolving, always searching for a better place to grow, expressing itself through all avenues, shaping our past, where we came from, our roots, the present, and ultimately our future. Some say it talks, others say it makes the world go round. But in truth, it has taken us beyond our own planet. As the days go by, emerging technologies are rapidly connecting all aspects of our lives and industry together, making the world an even smaller place. It's not just our responsibility, it's our passion, our knowledge and expertise. We make sure that our DNA is part of its evolution, part of its identity and protection, part of our industry's future. EcomBX. With us, the future is today.
InfoCredit Group, a leading provider of compliance and risk solutions for more than 45 years, empowers businesses with a sophisticated suite of AML and KYC tools, which can assist you to mitigate risk and meet your compliance challenges and regulatory requirements. Our solutions vary from prior to client onboarding and all throughout the life cycle of your business relationship with your client. LexisNexis Work Compliance Data, through which you can screen against sanctions, PEPs, and media, automate your procedures and reduce false positives so to proceed to onboarding with confidence. Risk-based approach tools to categorize clients based on their risk and know when to apply appropriate due diligence. ID and passport verification, as well as AML consulting, manuals and legal solutions to be sure you are up to date and in compliance with all regulations and directives. InfoCredit Group is a strategic partner of the leading risk management and data analytics LexisNexis Risk Solutions, with representation in Cyprus, Greece, Malta, Romania, Russia, and the UAE.
Two brothers with a taste for adventure who set out to have a positive impact on the world by developing unique compliance solutions. Their mission? To fight global crime, providing the weapons to fight crimes directly related to money laundering, human trafficking, drug trafficking, organized crime, and terrorism. Helping desperate compliance officers protect their organizations with a compliance software platform like no other. The result? RegTech Platform, a regulatory technology platform, an end-to-end KYC and AML solution which delivers tools that minimize your risk exposure and help you in the fight against money laundering with facial recognition technology, document verification technology, negative list screening for exposing sanctions-listed people and politically exposed people, risk categorization, transaction monitoring. This platform is now being used to protect organizations with hundreds of thousands of clients around the world. A complete shield against money laundering, from onboarding to KYC to ongoing monitoring of the client, giving you, the compliance officer, the most effective weapons to fight crime, bringing peace of mind and changing the world for the better. Over the years, we may have grown, but we're still doing exactly what we set out to do, having a positive impact on our world.
Linux containers let you package applications with their necessary dependencies to simplify application deployment and speed delivery. But securely delivering and maintaining container-based apps at scale can be complex. That's where we come in. Containers rely on Linux, and no one knows more about Linux than Red Hat. We're active in open source container communities and the second largest contributor to the Docker and Kubernetes projects. With containers, as with everything in IT, security is your largest concern. To keep your containers safe from one another, we use isolation technologies like SE Linux. To make sure you can trust each container you choose, we offer a collection of source images that are continuously scanned, monitored, and updated. And to keep your environment safe, we provide tooling to inspect and approve containers as they move from development to production. Standardization and consistency create a common foundation that leads to greater application.
Ladies and gentlemen, if you could please take your seats. We're about to begin for the second part of the conference. Thank you very much.
Infrastructure consistency means you can confidently deploy and maintain container-based applications anywhere, from bare metal to cloud environments. When you're ready to scale, Red Hat's container platform gives you the architectures, tools, and processes.
I think it's time to kick off the second part of our event today. If I could ask all our participants to take their seats, please. So I think we're ready to proceed, and we have our first speech for the second part of our event today. Think like a fintech. I call to the stage Dr. Edwin van der Oudera, Senior Managing Director, Global Lead Customer Sales and Service, and Global Digital Banking from Accenture. Dr. van der Oudera, the stage is yours.
Thank you. Hi, everybody. I'm Edwin. I'm very pleased to be here physically in Cyprus. It's great. Right, so let's start the music. Maybe just one word about myself. So thank you for the introduction. So I've been working with banks for about 35 years by now or more. I used to have also my own company many years ago in the beginning of the 90s. Now you would call that a fintech. In those days, we just called it a starting company. But we had venture capital, and so I consider myself more an entrepreneur than anything else. But I've been spending most of my time since then at Accenture and working for banks. I led the payment practice, and over the last 10 years, I've been leading digital for financial services. So I've been working with banks across the world and with fintechs and so on their digital transformation. So I've seen a lot of them. And in the last 2 years, most of that was in video, but before that, I was always on a plane, unfortunately. Maybe also something worth noting is that I had the honor of being invited to be part of the kickoffs of Basel III, and I was the chairman of the liquidity session, so when we created the Basel III framework a while back. Good, let's talk a little bit about what we see happening with the transformations of the banks and the fintechs and how one is influencing the other. First of all, I think, as some speakers alluded to that, we have now with COVID had an acceleration of the digital trends that we saw happening. We call it fast forward to 2025. So basically all the trends we thought were just going to happen by 2025 very nicely are suddenly here because everybody in the world had to suddenly go and sit behind their computer and do everything digitally. So that's that acceleration. Now, that's happening mostly outside of the banking sector in a certain sense. Everything's become e-commerce, and that's true in B2C, but it's also true in B2B. So that's where the real economy is. It's now all online, and we call that the digital by default world. So it's not anymore, we have the normal world, we have normal business processes and pen and paper and stuff, and then on the side a little bit of digital, okay, which then became bigger and bigger. But everybody was forced to only do the digital. That was the only thing that worked. So what we now have is a world where every company now has to do everything digitally, and then they think about what will we do physically, on-prem or face-to-face, you know, and that's a total paradigm shift that has happened. And of course, the same is true in banking. But the result is that the banks, of course, need to be in that new world and not just sit in their branch and wait for people to come. They may come for a conversation, but that's not where the real economy is happening. Okay? And so the question is what banks need to do. We saw that with some of the examples today already. Are you going to make a super app? Okay? And you're going to try and organize a lot of stuff of the economy in there? But you know, a number of these guys here have super apps. I just saw that Grab IPO'd last week. And that's an example of a super app. And what's interesting is that Grab has SoftBank and MUFG from Japan as one of the key shareholders, and they now hold a virtual license in Singapore, virtual banking license. So which one is now the bank? Which one is still a fintech or another classic big tech player? Then there's a number of examples where banks organize ecosystems. And what's interesting is just in the last year, I have 7 banks that I'm personally working with where we're installing marketplace softwares. So where the bank is taking an existing ecosystem that it controls quite well, like let's say truck sales or everything around farmers, and they take that ecosystem, that physical ecosystem, and they bring it onto such a platform and then do everything digitally and connect everybody. So maybe that's a strategy. Or the banks need to, of course, service the others, but then they're also in strong competition with fintechs. And of course, a lot of banks are afraid to become utilities. But there's a way to do this so that you don't necessarily become that utility. But what we see is that with all the discussions that we have with banks, it's always somewhere in that spectrum that they're wondering what to do. But then, apart from that, which is to me, which was actually the evolution, the acceleration of what I would almost call now the classic digital transformations, there's what's happening with the fintechs. And we have the pleasure to have the wise people here today, so they can explain it even better than I do. But what we see with all those fintechs is that they have a very different approach than the banks. And now I'm not even talking neobanks. I make the distinction between a neobank, let's say an N26 type of bank, versus a fintech. And one statistic that I thought was really striking from a few months ago, the whole banking sector after the financial crisis the whole of it across the world was worth about 7 trillion. And it's still worth about 7 trillion. All right? So if you would have invested in the whole banking sector of the world as an institutional investor in those days, you would not have made much money. Okay? Now, it's been ups and downs, and there's been winners and losers, but the whole sector has not really moved. So that tells you something about the evolution of the banking sector versus the rest of the economy. But the top 20 fintechs alone, and that's without counting neobanks, are worth 1 trillion right now and still going up very fast. So that also tells us something. Now, there may be a little bit of an exaggeration in price valuations, who knows? You know, and maybe banks are a bit underpriced. If you look at the price to book value, that may also be true. But still, it does say something, and it's not just those 20. What we also see is that a lot of those fintechs are actually making a lot of money. We're not in the dot-com days when people, you know, started a company and didn't even know what the revenue model was going to be. And that's also one of the reasons why I make a distinction with neobanks, because there's still a lot of neobanks that are wondering how they're ever going to make money, okay? If you give all your services for free digitally, you can get a lot of, I don't know, Generation Y customers, but that's not necessarily going to do anything. And we have a lot of conversations with investors around these things where they say, well, how are these guys going to make money? Well, who knows? Maybe they need to become a modern classic bank in a sense, or maybe do like the fintechs. But what have the fintechs really done, the good ones? And in a sense, if I can be provocative, I'd say these guys should not exist, if I may be provocative, because in essence, and I've been building systems and creating new products for banks for years, all they're doing are things the banks should have been doing. So why are they there? Why aren't the banks doing all of this? Okay? So it's a good question, no? But what they do is they take one product, right, one slice of the banking product, and then they decompose that product to its essence of what the customer really wants. Not what the technicalities historically are in the banking sector about that product. It's a big difference. What does the customer actually really wanted? Because banking products, it's like, you know, a round hole in a square peg. Customers don't want banking products, they want stuff in their life, but the banking products don't quite fit. Okay? So we have to always mentally adjust to the stuff that the banks offer. Fintechs have understood that. They go to the core of what clients want, and then they rebuild that up. But to quote the CEO of Robinhood, okay, he's got great videos on that, think Silicon Valley, not Wall Street. Think of it like a unicorn or a big tech in Silicon Valley. That's how you build your product. And those products have what we call extreme simplicity. I'll give you an example. I've done a lot of consumer lending, buy now, pay later, and so on, also for banks, digital ones, straight-through processing. But even as we made those products as simple as possible, once all of the different other departments of the bank came in and they wanted to have their say, we literally get hundreds of features extra, okay, often that the client hardly sees, that are lumbered onto the specs of those products, and then everything gets really complicated, okay? And that's what these guys try and just avoid completely, and it's really, really hard. But if you do it well, banks can compete well in that same space, and you can be like a fintech, okay? So extreme simplicity. And the second thing is, what is also used a lot as a terminology in Silicon Valley, which sounds a bit strange at first sight, is zero servicing, okay? It doesn't mean no service. It means you fundamentally design things so they are straight-through processing for most clients in real time, and there is nothing to do around them. It just works. And if the client needs a change, they are empowered to do that themselves. That's it, okay? It's actually a lot harder than it sounds, of course, to make it happen, but that's how it is. And they use examples like Airbnb and YouTube and so on. Has anybody of you ever called the call center of YouTube? I don't think so. Has anybody of you ever gone to a branch of YouTube? Probably not. You probably didn't even know it exists. But my wife goes to a branch of YouTube in London, in Camden, because she's a professional vlogger. But the 3 billion other people that use YouTube, they don't need that branch. Any idea how many people use the call center of Airbnb? Of those hundreds of millions of people that use the call center, that use Airbnb? Any idea? A wild guess? Well, 0.01%, okay? That's what I mean with zero servicing. It's not necessary. How many people call the call center of the big hotel chains? A lot more, okay? So that is the simplicity of these products, and that's where we need to get to. Now, I'm not saying that banks should have only 0.01% of their customers call the call center, because you'll be thinking that right now, and that's not, of course, what we want. But when they call, they will call for what the client thinks is a meaningful conversation. For them, meaningful, not for you. For them, an advice conversation, a relationship conversation. And then all the rest they'll do with their digital tools. You know? Good. Here's an example of a bank that has done that very successfully. Now, I must also admit I've helped them a little bit. Not just me, of course, but I was a little bit involved. But it's a bank that has really transformed in doing such types of super apps, and actually started to work like a fintech, became most transformative bank in Asia, which is very nice. Started with 6 million customers, of which only 1 million used mobile. Now 12 million and growing. Use QR codes, hundreds of thousands of merchants in the ecosystems. And what is really interesting, and this was released only 2 months ago to the investor community, so it's a public document, what they've done is, so you had the bank, which was publicly listed, which has some companies underneath in the group. As they started doing digital lending and lots of other similar initiatives that are basically fintechs run by the bank and run like fintechs, they are now become so important that they dwarf the rest of the bank, and they've just restructured, so they have a holding company that is actually the listed entity, and the bank, the classic but transformed digital bank, is a bit like, as one of the speakers was talking about earlier, is the one that holds the strong balance sheet, okay, of the bank, with the tier 1 capital and everything. And then all the other companies that they have around blockchain and digital lending, et cetera, they're all part of the same portfolio with the bank. So they've adopted a structure that's much more like a soft bank. So that's their model. Okay? And from there, they're going to continue to innovate. And I think it's really an amazing example of how a bank transforms from being a very classic bank in the old days and becoming as good as fintechs and better. The next thing I wanted to talk about is, as all of this is happening, well, I'll leave my mobile phone, I think, down below, but actually what's happening now is what we see with all these fintechs and modern banks is the customers can do everything with their mobile in real time, 24/7. So what else is there to do? What else is there? Well, the rest is conversation. And that's where we say the whole concept of classic omni-channel of the banks is totally changing and is becoming, in the end, only a video conversation. Your clients are in video all day long anyway, okay? With their family, with everybody else. They might as well be in video with you. All right? And here's an example what we did together with Microsoft, where we take a full mortgage journey, end-to-end, everything. It's all just video conversations with the whole ecosystems of brokers and assessors and advisors and back-end people, risk people, whatever. Everybody is in video with each other and with the client, and all the applications are inside of the video, okay? And they collaborate in real time with the mobile. And that's the new way of thinking about omni-channel. So that's what a bank is now going to be looking like. And maybe sometimes you'll do it physically. Maybe you'll meet physically instead of in video. But there is a concept behind that which we call everybody customer facing. So in a bank that's a straight-through processing bank that operates like a fintech, okay, there's a small group of people that are doing like product management and risk management and compliance and so on. Then there's a group of people that are managing what I call the stovepipes of the straight-through processing, and the rest is all customer facing, okay? So the paradox that we see with the banks that are already adopting this is that they actually, even though there may be less people working at the bank and there may be less branches, like some of the examples that were quoted before, they actually have more customer contacts and more meaningful customer contacts. So it's a completely new decade that we are seeing. So I'll just skip this. So I just want to summarize. Rebuilt for extreme simplicity, rebuilt for zero service, and then the Amazon philosophy, which I forgot to mention. So Jeff Bezos talks about that. Every customer is a king or a queen. Okay? So when they call, we will help them, even if we think that they did something really stupid. But Jeff Bezos says, if they did something stupid, it's our fault. We made it too complicated. They should not have to make that mistake. It's our fault. It's not their fault. So more than just classic root cause analysis in a call center, he will ruthlessly look at what can we simplify in how we operate from the customer perspective so that this will never have to happen again. And that's why Amazon is so strong. I invite you to read his stuff if you haven't done that yet. But that's the philosophy we want to apply. Okay? And then we talk about the customer care with these call centers or service centers in general. And it's about empowerment of the customers. All the customers want to be able to do things themselves and with full control, okay? And not offloading like one of the CEOs of a bank that I worked with a very long time ago, end of the years 2000. He said to me, Edwin, you need to get rid of half of the servicing that my call center does because it's too expensive, okay? And you need to get the customer to do it. I'm like, okay. And he says, and the reason is, I don't pay the salary of the customer. Okay? I'm like, and it took a while for me to kind of absorb that. Like, okay, yeah, I suppose that's true. I'm like, but there's something wrong in that reasoning, no, isn't there? Okay, well, of course there's something wrong, okay? Because what he's doing is he's offloading the internal complexity of the bank, which he fails to solve with his own people, and says, you solve it, Mr. Customer, okay? Okay, well, that's going to work well, isn't it? And then he said to me, and by the way, my call center cross and upsell doesn't work very well. Like, really? Do you think people are going to be so happy when first they had to solve it themselves? Then they call the call center anyway, then they're very angry, and then you think you're going to cross-sell and upsell. I don't think that works, all right? So this is the recipe rather, that is empower them, make it simpler, give them all the tools, okay? When they call, treat them really well, okay? And then you will have Net Promoter Score that's really good, and then cross and upsell goes through the roof, okay? So that's my conclusion for my speech. So really think like a fintech. So I'm sorry, this is not Cyprus, but this is another place that you might recognize. So thank you very much.
Thank you. Thank you very much, Edwin. I don't know if we have any questions from the audience.
No
so if you allow me to pose a question. So think like Silicon Valley, not like Wall Street, you said. Very interesting. And I believe and I see that a lot of banks know what they need to do, but they are facing real challenge to transform themselves and be really customer-centric. One of the challenges they face is balancing compliance with transformation and meeting the requirements from the regulators. You've worked with banks, you've worked with regulators. How do you see this balancing act between compliance and transforming the bank, making it more nimble, more agile, more customer-centric?
Yeah, I think that's a very good question. I think first of all, you need to get the basics right, okay? So you need to be able to walk before you can run. So there's often with banks, when they have relatively low maturity in how they can conduct change, you need to be able to kind of fix lots of things and then gradually get more capabilities to be able to make transformation. That's for me is the first thing. Once you're at that level and you can do that, then you need to, just to use a funky word, you need to use the agile methodologies. But basically what that really means, it's very simple. It's what you do is you get all the people that are involved in a project. Let's take, you're going to do new real-time digital lending, for example. You're going to get all of the people that are involved, you're going to get them around the table from the start. That's in essence what these Scrum teams do. And you get your own risk people, and you get your compliance people, and the cybersecurity people, and so on, from the start in the project, rather than doing your stuff, and then after 6 months saying, hey guys, can you quickly approve this because we need to go live in a few weeks. Okay, then they're not very happy. So then it doesn't work, because you need to design these things from the core so that they can work in straight-through processing with all the security and the compliance, with supervision of your, I always say it like that because we always draw rectangles, like the risk appetite box, so that you're inside of it, that all of that works. And that, to me, is the banks that do that well, that's the success factor for me.
Very well. Thank you very much. Okay. Thank you. Thank you, Edwin.
Thank you. Bye-bye.
Thank you. So let's proceed with our second panel discussion among bank CIOs. And I would like now to call to the stage my panelists, Christos Eojourian, Head of Technology and Digital in Hellenic Bank, Spiros Loizou, Chief Information Officer, Eurobank Cyprus, and Mr. George Georgis, Chief Information Officer from Bank of Cyprus. Thank you very much for being with us today. Thank you for accepting the invitation to be part of this panel. The COVID-19 pandemic was a stress test of unprecedented proportions for banks, putting their technology architecture, strategy, and workforce under immense pressure. I believe that technology played a major role in the rate of response to the changing needs of the customers and the employees amidst the pandemic. Even more, banks significantly accelerated the pace in which they were introducing new features and capabilities in their channels to serve their customers better and in a more digital manner, enforcing this way the mandate for social distancing. Furthermore, banks, with the support of their technology functions, managed to support the remote working model adopted for large periods of time during the past couple of years, and from a large proportion of their workforce. Discussing the matter with bankers in Cyprus and abroad, they have expressed the feeling that the crisis was kind of a sobering experience that dispelled any illusions about how far banks had progressed with their digital transformation. It was very clear from the presentations up to now from the CEOs and the regulator that the new age in banking competition is coming. One where IT architecture matters, and leaders will be decided not just on the success of their business plan, but also on the ingenuity of their technology changes and the robustness of their technology departments. This is as an opening statement. I kindly ask the three of you for an opening positioning. George, if you would like to start.
Thank you, Rostome. Just a short thing about the past. The pandemic, yes, did accelerate everything, but as Bank of Cyprus, we didn't have to actually do anything more rather than supporting the employees working remotely because we had started a few years before. Actually, that's what we were discussing with the colleagues before. So the pandemic kind of validated our plans. Going forward, and I didn't plan this, but I have to say that I fully agree with Edwin, and thank you very much for that. He's not there. I fully agree with Edwin because Edwin presented exactly what our philosophy is, and I'm not saying that it's easy. I'm not trying to say that we have adopted all that, but we have adopted the approach and the state of mind. We are trying to get the bank to be in the real economy, and I like that term because the real economy is where the need starts and not where the need is fulfilled. And also, we're trying to use the focus of teams. For example, our mobile team uses the agile methodology is focused, and also any new project that we're running. For example, Panicos Nicolaou, our CEO, explained before the initiatives that we have, and those were not just planning, they're things that are running now. Anything new we started with this methodology where we have a focused team, and we are addressing either internal needs like end-to-end lending, for example, or the projects that will bring us close to the real economy, like the digital economy initiative that we have in that way. So I think that what Edwin said before needs to reflect with everybody, because what's missing is you said the challenges before is the how very often. The what, it's not that hard to know. I mean, we're not all, innovators. A lot of things are out there already. The how means that we have to bring down the monster processes that Oliver referred to before. And we have to get all the stakeholders to work together, including compliance, control functions, and the regulator. So I think for us, that's where we are focusing. And based on my background also, the how is extremely important. And I think that we are in a good path to do that.
Thank you. Spiros?
I have to agree with everything that George says, as always. I'd like to, first of all, thank you for the invite. It's good to be among colleagues and friends. I think the more years progress, we see that we're running different directions, and we have a lot to do, but we get a feeling, and I hope, us three together, we are literally talking every other week, not on, strictly speaking competition stuff, but how do we make sure we understand what the economy needs and what the common good really is for a small place like Cyprus. If we get our heads together and run in the same direction, I think we can do things very fast. And I think that's a really nice feeling that we're getting through the, at least in the past couple of years. I would say that, as my opening statement, not to repeat what George already said, I think inside a bank, technology has been more business than ever, which is a good thing. It still needs a lot of way to go to make sure that people do not treat IT as, we have a project that IT needs to run with some analysts and a project manager. It's not about putting some slides together with a roadmap. It's more being in a position to impact the business directly, both the cost side, which previous speakers were quite vocal about, and the revenue side. And I think that cannot happen without discussion. I like the phrase from the RCB CEO. If we stop discussing, then we won't be as fast. If we stop sharing ideas as well and contributing to this ecosystem in a very small country, right? Then I think it will be the death of us, all of us. And I would like to focus on that part in today's discussion more than ever. As Eurobank, obviously we're doing what needs to be done. We're investing in technology. We're treating this as something that had to be done 2 years ago. So the urgency is there. We're building everything from the bottom up. We're changing 85% of the landscape in our bank. And in essence, we want to take the P early, make sure we don't, whatever legacy is there, we get rid of it. We have a good baseline, and then we can run verticals and not treat, different initiatives as an IT project or a compliance project or a business project. And we are really focusing, going the way that we get to an objective, a target, and then we build underneath that all the elements that are required from a compliance, from a legal, from a process point of view. And if you do that, you will quickly realize that the technology is the least obstacle. Technology is there to do wonders. It's everything else that sort of needs to fall in line and sort of work together in a vertical to make it happen. So,
thank you, Spiros. Christos?
Firstly, thank you for inviting me. It's a pleasure and honor to be among you today. I will actually try to not repeat what my colleagues here said. I think the theme is common. But what I would like to say here is maybe start with a bit with the word change. We've been undergoing change for many, many years and many, many decades now. I don't want to go back too long, but if you start looking at how the change has impacted the banking sector, maybe start with the 90s where you could get the computer to do something for you, then 10 years later, the internet, the connectivity. 10 years after that, you had the mobility. It was the mobile era and how everything is on the go. Following that is AI. You can get things to think for you now and get decision making. As a bank, we've also gone through a lot of change, especially back in 2019 on the back of the integration with the Cyprus Cooperative Bank. So change has been in our kind of front page for a big while now, either internal, external change. What we've been doing essentially here is we're trying to work with internal and external factors and adapt to what the business needs are. So we need to use technology similar to what Spiros and George mentioned earlier to become that enabler and not become the problem across the banking sector or the organization. What we're focusing on at Hellenic Bank is especially with the assistance, maybe if there was one positive effect from the COVID-19 pandemic, was the digital migration that we've managed to accelerate drastically for the bank. So we've managed to actually onboard, as of last year, increase our customers on the mobile app by 56%. We've managed to show that we had the operational resilience to actually have the bank operate during the COVID pandemic and the lockdowns that we have been undergoing. So that allowed the customers to have a smooth operation and smooth servicing. And that, again, goes back to the point that George mentioned earlier, that this shows that the banks have been investing in the right space. But that doesn't mean that we've done enough or we have done everything we have to do. If we look at a bit what's happening outside, maybe we talk a bit about fintechs, neobanks, or even non-banking institutions. I think it is important to understand how these impact the banking sector. These days, these players have so much data in their hands, so if you start using that data, they can start assessing financially a customer, potentially even better than a bank can do, considering either the landscape, the existing IT landscape we have today, or issues we're facing and essentially the whole transformational journey that we're undergoing. If you put things into perspective and understand how these fintechs or even non-banking institutions can now start offering services completely remotely outside of Europe, within Europe, outside of Cyprus, I mean, then we need to start realizing that we need to come together as a banking organizations, work with the regulators, see how we can unlock frameworks, see how we can use frameworks in our benefit so that we can essentially compete. Because at the end of the day, there is the local competition amongst us, which I think is healthy, and then there's the external competition that we cannot control. Based on the pace they have, based on the technology they're using, but most importantly, the fact that they have started from a white piece of paper and essentially redesigned and re-engineered everything that we're trying to transform before we get to that point. So I think there's a lot we all banks have to do to actually maintain our conditions and our market conditions and essentially our market share. But at the same time, we need to start cooperating more and make sure that we are as a single group when it comes to Cyprus competition versus European competition coming from abroad. That's it. Thank you.
Thank you, Christos. George, what would you say are the biggest inhibitors of change or transformation in the bank? And do you see regulators being supportive to your efforts for digital transformation in Bank of Cyprus?
So,
why do you always get these questions, George? Why do you always ask George these questions?
I think because I'm 10 years older than you. Yes, and I have more experience.
Yet you came with business casual and you're showing off.
Anyway, so back to the inhibitors. I will start with that first, and then we'll talk about the regulators. The biggest inhibitor that I think the banks have is the internal state of mind, okay? Which sounds bad. And again, I always say something when I talk about the Bank of Cyprus, and I'm talking about the bank because I'm there, I assume it's similar to the other banks, is that once you join a bank, you realize that there is a lot of good people, very strong people, and also you realize how much they can affect the economy. At the same time, there are certain states of mind that have been there, that's basically the legacy bank. It's a state of mind, not the systems. The methods of working, like the ones Edwin said before and the one I referred to in my opening statement, are the only ways of changing these states of mind. Basically two things. You have to assign capable people that have a vision and are not afraid of change. And then you have to use the methods where people come together and they work on something without having this series approach where I do something, then I give it to compliance, and compliance gives it to risk, and then moves on. That is the biggest inhibitor for me. Technology used to be an inhibitor. It is a problem in certain domains still, but it's not the problem. In saying that, before I go to the regulators, what is digital transformation? I mean, it's on the title of our financial services panel now. For me, digital transformation is not a function anymore. It has to be operationalized. It has to be part of what we do every day, and that happens using the methods that we said before. A digital transformation function, which we do have it at the bank, they have it at the Hellenic Bank, but we're thinking about the next day. It was something that was used to accelerate and kind of drag everybody together. I think that's old. Going forward, transformation has to be about the methods and about the key people in key positions that are actually facilitating. Now, regarding regulators are great. We love them. And they love us. We have a special relationship. And we need them. And why do I say they're great? They're great because they can actually make a difference. The governor before gave a presentation, and to me there's two sides to the presentation. He said, we need to do all these things, but there are all these risks. If the regulator manages to change the state of mind and get the right people in the right positions, like I said for our organizations, and they can work with us as stakeholders in the ecosystem, we can do great things. We've seen these examples in Greece. Okay? And I think that the central bank locally is going in that direction, but we still have a gap at the pace at which we address things. Because yes, there is risk if I place everything on Azure, on AWS. Of course there is a risk. I'm the CIO of the bank and I know there is a risk if my systems run in my data center. We never measured the difference, okay? So that's just a small example. Or another example I always give, which supersedes the central bank circular or the law? That's another fight we always have. You know, we have to get legal opinions and it takes months. We need to regulate, we want regulation, but we need to do it faster. And faster doesn't mean relaxing controls, just getting the right controls at the right time and with the right pace.
Thank you, George. Thank you. Do you want to comment, Spiros?
I just want to say I completely agree, 100%. And it's a message that we need to somehow find a way to work together. I completely agree that it's not relaxing. In most occasions, is knowing what to do, be a level a bit more specific, and maturing to a thought where you write down a guideline, for example, and you can interpret the guideline with more comfort that what you're about to do doesn't require 1,500 man-hours of legal and compliance services externally just to make sure they rubber stamp what you think you understand, or trying to find, in some cases, loopholes or things to do to make sure you're faster or you do things a certain specific way. So in most occasions, as it relates to the regulator, we need that very focused regulatory guidance. And in most cases, more than not having the regulation, is having more direct and more easy to read regulation maybe, which is a challenge of its own, but I would say that's a start. I don't know if George agrees or Christos. That's my comment.
Christo, do you see the regulators and the support functions, the audit, the compliance, the risk managers, being really a challenge or an inhibitor, as I mentioned earlier, to change within Hellenic Bank?
I think it's a matter of understanding the risks. I think people are afraid when you start talking about risks. George gave a good example with cloud technology and how we can leverage cloud technology. And I think they sometimes become more uncomfortable with approving, or not approving, but allowing the bank to actually shift to these technologies, because I believe the problem lies with knowledge of the actual item we're talking about. If it's cloud technology, unless the regulator, the control functions, the audit, all these people have the specialists within the organization with the training, with the necessary knowledge, so we can speak the same language, I think that is the real problem. I don't think they're blockers. I don't think there is anyone in the organization, and I don't think anyone on the regulator side wants to block any bank within the island to not shift to the cloud or not enable the digital transformation. I think it's a matter that this unknown aspect gives some uncomfort to people when it comes to discussing about all these different models. Is it SaaS, is it IaaS, PaaS, whatever that may be, and people don't really understand the the gritty detail. And as I say internally, the devil is in the detail, right? Unless you really understand what you're really subscribing to and what you're really implementing, so that then you can properly measure the risk. Again, I want to quote George, because it's an example we also use internally. It's like, how do you differentiate between the risk of having a Microsoft or an Amazon running infrastructure versus having some local team running an infrastructure? What's riskier at the end of the day? I mean, he mentioned it earlier, and he's spot on, right? And this is where these functions, control functions, really need to question themselves, and we need to educate them. We need to help educate the system so that we can use the control functions and the regulation to be an enabler and enable us and push us towards transformation and digital transformation. So,
if I may, just very quickly, I think a key common point here is I think that both the regulators and control functions that we are working with and they're improving, they need to actually acquire these skills. Maybe there's a new role, risk technology, officer, something like that. There needs to be knowledge in those functions, and that will help a lot.
Great, thank you. So, George, another question. A significant issue that everyone is facing in our line of business, in the technology business, is the acquisition and retention of talent, especially here in Cyprus. But I think that the issue is maybe global, definitely European. How does the bank deal with this problem?
Look, we don't have a magic solution to that. I think it's not just the bank, it's every organization. Even in your line of business services, it's the same. What we have done is that in addition to the normal procedures of hiring some new people at certain levels, when we focused certain projects, like I said before, we created focus teams to run certain projects. We were able to hire some people from outside, even from abroad. I mean, we have people now from Greece, the USA, Lebanon. It's not for everything, it's for focus projects, but I think that's one way to solve it, rather than going the traditional way of trying to recruit somebody with the same terms, with the same, long-term vision. We can kind of solve it by focusing on projects and then staffing that, ring-fencing that team, making it deliver, and that helps accelerate. But it's not an end-to-end solution, I understand, it's just one method.
What about sourcing strategies? Does the bank?
Well, great question, and it links to the regulator question, because the moment I have an extensive reliance on a third party, then it becomes a risk. And we had that. Sourcing is part, of course, of the solution, and I didn't mention it before because I was thinking direct acquisition of skills. As Bank of Cyprus, we've had sourcing engagements for the past 5 years. We have a big one. I mean, it's common knowledge with IBM that basically helped us accelerate, but even in smaller components, we do that also. It cannot be a permanent solution, because the moment it becomes a permanent solution, it also hits, it changes also from CapEx to OpEx and all of that, and the regulator starts getting uncomfortable, and we need to have a plan for exit. So,
thank you. I believe we have also a question from our audience. We're going to see it on the screen in a while, so let's proceed. Christo, the CEO of Hellenic Bank, mentioned in his speech that the bank will use technology in its favor to sell products and services. As head of technology, how do you see that happening? How do you plan on supporting the CEO doing that?
Sure. Great question. Thank you. What we've been doing, we've embarked on a transformational journey now, and what we're trying to do is essentially start thinking end-to-end. I think it was mentioned previously in another speech. We're starting to think end-to-end. We're trying to put the customer at the center, make everything customer-centric, and stop thinking process-wise and maybe compliance-wise first. We're trying to solve the problem of the customer. We're trying to re-engineer all our processes end-to-end. It's a big exercise, and it takes a lot of effort. But unless we actually nail down the actual process, we simplify the process and actually make it that it fits the customer experience that we want to be offering to the customer, we won't be able to achieve it. So what we're doing through this transformational plan, essentially we're trying to tackle each and every process, break it, simplify it, and then actually sell it and promote it to the customer. So that's the main key driver on our sales strategy.
Thank you, Christos. We have a question from our audience. As I said, global fintechs have a focused strategy and huge tech and resources. As a fact, did you consider complementing them instead of competing? The Cyprus bank's top asset is their customer and merchant base, so why not leverage that into business to business and even better B2B2C offerings? Who would like to take that?
I can review.
Yes. Yeah,
actually, it's a truthful question to ask. But I will start from a point of view that size matters. Global fintechs have great solutions, very good solutions, and a lot of resources. When you try to cooperate for the local market, it becomes often, and I'm not excluding, I'm just saying some experiences we had, it becomes very heavy. Usually, global fintechs work on a percentage basis of the transaction or the commission or number of customers. So for our market, what we have found is that it puts a lot of weight on the, let's say, the client or the merchant, or I have to transfer some of the cost. Their global models don't always fit with our small market. Having said that, it doesn't mean we shouldn't try. I actually am a big fan of incorporating components from fintechs that they have to develop everything, but it has to fit the local market, because the moment I increase the service fee on the transaction of a merchant, then I'm actually not facilitating the digital economy. Mm-hmm. I'm providing a service, but it becomes very expensive and not sustainable. Mm-hmm. So where, whoever made the question, where it's sustainable, we are all for it and we should be doing it.
Do you consider, Spiros?
I think the comment on getting more skills and more staff is proportionate to the objective, right? Typically, a fintech is laser focused to do one specific thing as a starting point at least. And therefore, having that specific goal means you have, by proportion, less people and less dedicated skills to secure towards that objective. As opposed to a traditional organization like a bank, you're typically sharing resources. A person, you find more generalists in a bank and less people with real, true experience in, for example, cloud computing, just piggyback from the previous example, which means it's harder to staff. So by way of also linking to the previous questions, you do need to use an accordion as a bank of, getting external resources for specific projects or objectives, specific verticals you want to build, but ensuring that what you bring from outside, you will get a residual knowledge staying with inside the organization for continuity for the next one. So the next vertical you want to build, or the next big project you want to do, will require less outside help. So you shrink the accordion of the external and internal resources more. Having said that, I think we are, as a banking community, personally, I thought the PSD2 sort of revolution, which we discussed for a long time, and we said it will change everything, it will bring this whole ecosystem closer. My assessment, it hasn't lived up to its expectation. And this is not only for Cyprus. I mean, you will see this across the board. And that should have been, and is still, the true enabler to collaborate with a fintech or a laser-focused sort of organization that can bring something very specific to the table. It's not directly competing with the bank, and there's a common ground to grow the business without, huge investments and growing a special team that you need to keep on for the next and the next and the next thing. So in my assessment, as a bank, we need to really tap into things like that, things like the PSD2 initiative, which, you know, it should be a common platform for everyone to come together. And that's one pillar. And the second pillar is, you know, coming together and creating these B2B platforms and be in a position to invite all of these people, the external fintech companies, or whoever can plug into our banking services and really use our technology as a platform to complement their services. So it's, in my assessment, that's clearly a maturity. There needs to be more maturity and equilibrium between us as an industry, the private sector, the regulators, of course, which we see really, I'm saying this again, really good signs of. But to enable, to answer directly to the question, we are, you know, maybe in a scale of 10, we are at the 3, and we need to go above 5, 6 to really see the, you know, getting people, what's the word, attracted to doing that. Mm-hmm. So if you do not offer the plug-in, the easy way in to plug into your technology, it goes vice versa, right? Then they will just build it on their own, and they will compete with you, right? So that's an element where we all need to work together at some point, at some element. But you know, each bank can do its own thing. But if we have a common platform as a country, then it becomes much, much, much stronger, because the skills are not enough to go around. If Christos builds a team and I build a team and Bank of Cyprus, George builds a team, there is no skills available for all of us, not to mention, you know, other big players or smaller players in the room competing for the same Android developers, the same iOS developers, the same API developers. Everybody needs these skills. So, smaller place, how do you do that?
If I may add to the question, I totally agree with both comments, but there's a thin line at the end. The moment you open up too much with European or global players, you potentially also put at risk your customer base because of the improved customer experience or the better customer experience potentially they can offer. Spiros mentioned about a laser-focused offering. So you need to be able to make sure that you're offering that service and you have all the mechanisms in place to make sure that the stickiness of the customer stays with you. You don't want to be losing your customer base because the moment you make it too easy to shift around and they can get a better servicing through a fintech or whatever that may be, maybe if it's PSD2 or something similar, then I think you will have a different problem to solve for. I'm not saying that's a blocker, but that's something you always need to keep in mind and have it on the back of your mind when you're opening up.
Sorry, can I say more?
Yes, of course.
It depends on, I agree with everything. It depends on the definitions. That's why it's kind of vague. You know, what's a fintech? Is it something that is competing with you? Is it something that complements? Because the question was talking about complementing before. For example, what Panicos spoke about before, we have a project for BOC Invest. That's fully with a fintech. We're not doing it by ourselves. So it is a collaboration, but it's where it complements and provides additional value. If I try to change what I do as a bank using a fintech, it becomes the problem that Christos said and the problem I said before. Because actually the cost goes up most times. It doesn't go down. So complementing, and I think that's a good example for answer to the question that was placed before. Yes, of course. And we have the PFM project is with a fintech, the BOC Invest project. So yes, we do.
Very nice. Thank you. I think there are a couple of more questions from the audience. You can put them up. Many banks in the wider region are implementing blockchain technology, resulting in quicker and cheaper transactions for their customers. Why are Cyprus banks not looking at this technology? When will the bank start recognizing digital assets such as Bitcoin? There are 8 So if you wanna, who wants to take this?
I spoke first, so go ahead. Before.
Are you looking into?
I'm happy to take
blockchain technology?
Actually, we've started looking at blockchain technology through a partner about, it was probably 2 years ago. We started investigating and looking into how blockchain technology can assist the bank around data exchange, and it wasn't just at the bank level, potentially even at a country level. It's something that, again, goes back to the point I made earlier around the comfort of people, and when I say people, control functions or internal functions that need to actually allow or prove that concept and what it really means. And at the end of the day, I mean, we call it a blockchain. At the end of the day, people need to understand what is a DLT, right? What is a distributed ledger technology, which is based on blockchain. So I think while yes, the answer is yes, we have been looking at it and we are still looking into it. We want to make sure that if there is an opportunity there, which personally I believe there is something there that is of value, provided there is the right group of people and organizations to collaborate, I believe that we can make it happen. The concern I have, or maybe the issues we're facing, is that, again, it goes back to upskilling and educating people so that you can really have a proper discussion around how do you use it, what are the risks, if there are any risks, and make people comfortable on the use and implementation of it. So I think if I'm completely honest, I think there is a bit more way that we have to go through and a bit more work we need to do as banks before we can get everyone around us fully comfortable to actually leverage such technology.
I agree, but I want to make it a bit more raw, let's say. We want to use blockchain. I think blockchain, the technology, not Bitcoin, is brilliant. It has to be very focused and specific. The use case has to make sense. There's a lot of initiatives to use blockchain just to use blockchain. And I agree with Christos. There's a couple of initiatives. We talked about them and can be very, very useful. We did have a period where the regulator was very uncomfortable with the word. Okay, so now it's much better. And I think within probably the next year, you will see some cases coming up. About Bitcoin, there was a good question about Bitcoin. I have no clue. It's a regulatory matter again. Once the regulators regulate the assets, then we will be much more open to use it. Yeah.
I guess in terms of blockchain, you need to build collaborations and consortiums.
Exactly. That's when it makes sense.
Individually, none of us,
does not make sense.
One entity can, implement blockchain to a use case which would make sense to the customer. Maybe you can. Huge organizations in multi-country locations, can do things for the internal procedures or what have you. But as something that will impact the customer, there's no way you can do it without a ecosystem, right? Mm-hmm. Which, every participant of the ecosystem plays with the same rules and with the same sort of minimum standards, and that's. The raw answer is yes. You look at blockchain in the same way as you look at Elon Musk and the commercial space travel. Yeah, I mean in my sort of assessment, you know what you can do. You know what you want to do, but it's a matter of coming together, really also opening up to what we commonly want to do, and then compete on a different level, because the service has to be similar and very homogeneous for the customer.
Okay.
I'm optimistic. I think it will happen because it solves problems, but it will be a national level ecosystem type of solution.
Yes, that makes more sense. So I think we're out of time. I would like to thank you very much again for taking part in this panel and for your insightful positionings. And we hope to see you again next year, guys.
Two questions. Are you okay with that?
Yeah, we're out of time.
Right.
Yes. You can answer the questions later. Thank you very much. So moving on with our next presentation, I believe we'll be having the cybersecurity in banking from Haris Floridis, Logicom Solutions. He's the division head for the business consulting services of Logicom Solutions. We'll be having Haris with us digitally. Hari, the floor is yours.
Hi, Chrysostomos, and thank you. First of all, I would like to thank everyone for attending this event. Unfortunately, I can't be physically there, but with the use of technology, I'm excited and thankful for the honor to be presenting here today. Now, in light of COVID-19 developments, I would like to first say that our thoughts are with those affected by the global pandemic around the globe. A global pandemic that presents an unprecedented challenge to public health, people's livelihoods, and enterprises. Nevertheless, we all know the Greek proverb, "Ουδέν κακό αμυγές καλού," or for our non-Greek speaking audience, every cloud has a silver lining. Without underestimating the negative impact that COVID-19 had globally, we need to admit some of the positive side effects it had to people's lives. It helped everyone and accelerated the adoption of new technologies. The use of online services, collaboration tools, and other technologies was our response to the global pandemic and the measures taken from the beginning of the outbreak. Global pandemic stressed the importance of developing self-discipline. We all have had a lifestyle change for the good. It was probably the first time we have seen in Cyprus people waiting in queues, following guidelines and keeping distance between them. We are going to remember to cover our mouths after we cough, to sanitize our hands after touching anything, because we know what can happen if we don't. Self-discipline is also key to be more efficient, productive, and maintaining a healthy work-life balance during a period where the lines between work and personal family time have blurred. I believe that everyone had to work remotely, at least for a specific period during the global pandemic. We all had different challenges to address in order to be able to work from a different environment, even when our children were demanding our attention. Remote working in different degrees will be here to stay for the foreseeable future. The pandemic presented a unique opportunity and is welcoming ideas to beat the lockdowns, work from home, and help communities. Organizations across the world are thinking about products and services that can enable us to be as connected as possible with our teams and our loved ones. And innovation doesn't happen for nothing, but when the environment demands it. Let's see now how the IT landscape has evolved as part of this development. The first digital transformation. The digital transformation was one of the key challenges for organizations, and global pandemic pressed the button to have this accelerated. More and more organizations are moving their services to the cloud, applying also a cloud-first policy for their new projects, expanding their attack surface. Mobile workforce and the risks arising from the work from home, and also more sophisticated attacks. During the last 2 years, we have experienced high-profile and sophisticated attacks targeting every organization, regardless of its size or the sector it is operating. As a response to the above, more and more advanced cybersecurity controls are needed, along with the use of AI. Supply chains, due to the acceleration and the fast pace that needs to be followed, and it was also a topic of the discussion during the panel discussion before, many activities need to be outsourced. The attacks against vendors and service providers have increased significantly over the last 2 years. During the 8th Banking Forum in January, we presented one of the most sophisticated and largest in scale supply chain cyber attacks that ever happened, the SolarWinds incident. Shadow IT services are the services that an organization is utilizing without explicit IT department approval. It has grown exponentially in recent years with the adoption of cloud-based applications and services. To address the risks, mostly to privacy and cybersecurity areas, we have seen an increase on directives and regulations, which require additional effort to ensure compliance. And last but not least is the requirement to have everyone involved in the different projects. Now, for those who don't know the person in this slide, Donald Rumsfeld was an American politician and government official who served twice as the Secretary of Defense of the United States. I understand that many people may be wondering, how is this person related to the topic we are discussing today? Let's watch a video with a response he gave to a question at a news briefing on February 2002.
Reports that say that something hasn't happened are always interesting to me, because as we know, there are known knowns. There are things we know. We also know there are known unknowns. That is to say, we know there are some things we do not know. But there are also unknown unknowns. The ones we don't know, we don't know.
Okay. Rumsfeld's statement, which may sound, I know it may sound a bit senseless when listening to it for first time, brought public attention to the concepts of known knowns, known unknowns, and the unknown unknowns that we'll discuss today. We'll go through different examples of threats that organizations today need to address, which fall under these three categories. On purpose, the three topics we'll discuss are based on a common threat agent, the human factor. So the known knowns first. As Rumsfeld explained, known knowns are things we know. From a cybersecurity perspective, this includes threats that we are aware of, and we have enforced different controls to mitigate the associated risks. In this slide, we'll explore the results from the Data Breach Investigations Report for 2021, as they have been published recently by Verizon. The investigation covered 80,000 incidents from almost 90 countries, including the outcome of the investigation of more than 5,000 confirmed data breaches. As everyone can probably guess, social engineering continues to be the most common attack vector, as 35% of incidents were caused through this vector. This evidences that although we can consider social engineering attacks to belong to the known knowns bucket, as almost all organizations have different controls in place to mitigate this risk, there is still area of improvement. Having that said, let's explore now the results from one of the largest in scale benchmark studies conducted to investigate the exposure of organizations to this threat. Known before, one of the leading vendors in security awareness platforms recently published the results of a research which covered almost 24,000 organizations across 19 different industries, including banking. The percentages we'll see present the PPP. This is the phish-prone percentage. It's the probability of having an employee clicking on a phishing email link or opening an infected attachment when a malicious email arrives to a user's mailbox. Banking sector had the third higher percentage for organizations that had more than 1,000 employees, with a percentage of 47.5%. It is noted that banking sector had the highest increase across all industries compared to the results of 2020. On a positive note, this percentage decreased almost 3 times after organizations enforced a continuous awareness program for a period of 3 months, and 8 times when this program continued for a period of plus 1 year, minimizing significantly, as we can see in the stats here, the exposure against this threat. Now, moving to the known unknowns bucket, the second topic that Donald Rumsfeld explained before. Again, based on Rumsfeld, these are things we know that we don't know. From a cybersecurity perspective, again, this includes the threats that we are aware of, but we cannot fully manage. We don't know how and when they will materialize. One category of threats that I find to fall under this category is the malicious insiders. We are aware of this threat, but it's very difficult to know when an incident will happen, and it's also very challenging to enforce controls across the entire threat landscape. In this presentation, we'll go through an incident that took place recently, a few days ago, and is related to an industrial espionage and data theft. The pharmaceutical giant Pfizer recently announced that an employee stole strictly confidential information in advance of a job move to a rival company. The employee copied in an unauthorized way more than 12,000 documents, which were including COVID-19 vaccine secrets. Now, for those who believe that this can happen from recently hired employees, it has to be noted that Ms. Lee, that was her name, was working for Pfizer for a period of more than 15 years, having the position of the Associate Director of Statistics in Pfizer Global Product Development Group. Moreover, Pfizer described in their complaint that they had in place a suite of security controls to protect their intellectual property. Nonetheless, the rise in the use of cloud services, shadow IT services, third parties that we discussed before, along with the use of personal devices and work from home, requires organizations to rethink their strategy in protecting their sensitive information and assets. In this slide, we'll provide some more details on the incident. The employee initially copied data to her corporate laptop device. Data couldn't be directly exported from the device due to the enforcement of different controls. However, the user was able to upload those files to Google Drive and from there to download them to other personal devices. For everyone to understand the impact of this incident and the value of the information stolen, Pfizer has invested over $2 billion of its own capital to develop COVID-19 vaccine. The investigation of this incident is still in progress. Moving now to the last bucket of Rumsfeld, the unknown unknowns. The most interesting, I would say, category of threats and probably the most dangerous, since these encompass what we are not aware of and therefore we can't plan, analyze, or take actions to mitigate them before they happen. For probably all organizations, global pandemic was in the list of dormant risks. No one could predict the outbreak of COVID-19 and the impact this could have on people's lives and business operations. One of the side effects of this pandemic was the increased demand for online services. More and more customers, regardless of their age or background, started using the online services that banks were offering to manage their accounts and execute transactions, which apparently accelerated the digital transformation plans of the banks. However, from a different standpoint of view, fraudsters tend to prey on unexpected events or challenges. When normality becomes disrupted, they see an opportunity they can exploit, and the pandemic supplied them with fresh targets to attack. During this period, banks' customers were heavily targeted by cyber fraudsters. The attacks, which were becoming headlines, were targeting to compromise web and mobile banking accounts of customers at an extent that we have never seen before. During the presentation we delivered in January this year in the previous banking forum, we informed that we are observing a rise in advanced phishing attacks and the implementation of techniques aiming to bypass the one-time password mechanism that organizations and banks were including to enhance and improve their authentication controls. Now, these hacking tools and cyber fraudsters are offering this mechanism as a service on a subscription-based license. They have made this very simple for their customers who can use this service directly through their Telegram account. One of the services is named SMS Ranger, while one of their competitors, OTP Bot, is also offering a 98% success rate and 100% uptime. Here you can see some screenshots I have taken from their Telegram account, which apparently has more than 6,000 subscribers. Among other services, they are also offering a premium support service, which a customer can utilize in case they have issues in obtaining the OTP of a bank customer. As explained before, cyber fraudsters are working in a very creative way, utilizing tools like Telegram and streamlining their process. Their customers need to register to the service, top up their account using cryptos, provide on Telegram the phone number of the victim and the name of the bank, and the bot will dial automatically the victim, inform him that there is an issue with the transaction, and ask to be provided with the OTP code that was just sent. The OTP is sent through a message on Telegram to the attacker, who can use it to access the bank account of the victim. And here is the cost of the service, which ranges from $500 to $1,000 per month, or 15 cents per bot call, which can be value for money considering what an attacker can do if this attack is successful. Moving now to the last slide of my presentation for the concluding remarks. Banking industry needs to respond collectively to disrupt threats and detect future attacks. Financial institutions must build a more robust and a more diverse cybersecurity workforce. Security is a constantly moving target. Cyber fraudsters are very creative in developing new techniques to bypass traditional controls, and everyone has to be on alert to respond promptly to the unknowns. We must safeguard the last decade of progress in financial inclusion and digital transformation. At this fragile moment, an incident could easily undermine trust, further complicate the post-pandemic recovery, and disrupt innovation. Cybersecurity is more essential than ever, and organizations need to formulate their strategy to improve their posture against the knowns and the unknowns. I hope you found this presentation insightful and helped everyone to understand the known unknowns that Donald Rumsfeld presented to the video of Donald Rumsfeld. Thank you very much for your time, and stay safe.
Haris, thank you very much, Haris, for your presentation. In the interest of time, let's move on to our next session, blockchain in banking. I call to the stage Mr. Vasilis Charalambous, a lawyer from George Z. Georgiou and Associates, LLC. Mr. Charalambous, the stage is yours.
Thank you, Mr. Chairman. Hello, everyone. It's a pleasure to be with you today. So our topic today is blockchain in banking. And while I could spend some time discussing how people in the beginning didn't like or trust other innovations similar to blockchain, like the car, the train, the telephone, the internet, instead I will skip this and get straight into discussing about this innovation and blockchain and why it's important to understand its limitations, adoption challenges, misconceptions, social, ethical, economical, and legal impact before we experiment or deploy this new technology. Most people who have a slight interest in blockchain probably know that the first Bitcoin software was openly released to the public sometime around 2009. But in fact, some of the technologies that blockchain is based on pre-existed. Stuart Haber and Scott Stornetta envisioned what many people have come to know as blockchain back in 1991. Their first work involved working on a cryptographically secured chain of blocks whereby no one could tamper with timestamps of documents. In 2008, during the aftermath of the global financial crisis, a man called Satoshi Nakamoto, a man with a name but no face, released his white paper, Bitcoin, a peer-to-peer electronic cash system. Nakamoto conceptualized the first blockchain in 2008, from where the technology has evolved and found its way into many applications beyond cryptocurrencies. The electronic cash system in question is Bitcoin, and with the public unveiling of Bitcoin in 2009 came the public unveiling of blockchain, the technology that underpins the digital coin and makes its existence possible. Most people believe that Bitcoin and blockchain are one and the same thing. However, that is not the case, as one is the underlying technology that powers most applications, of which one of them is cryptocurrencies. Currency is just the first application that you can build on a distributed consensus system. Other applications include distributed voting, stock ownership, asset registration, notarization, and many other applications we've never thought of before. So what exactly is blockchain? Blockchain, in simple words, is a distributed network of databases which is not governed by any central authority and makes the data immutable once linked with the blockchain by not allowing anyone to tamper with it. Blockchain is perfect for handling money, primarily because it was created exactly for this purpose. We have to note that we now have a definition for crypto assets in a Cyprus proposed bill, and specifically the bill on the distributed ledger technology, which was recently published by the Ministry of Finance for public consultation, and hopefully it will be passed into law soon. So according to the draft bill, a token or crypto asset means a digital representation of value or rights which may be transferred and stored electronically using distributed ledger technology or similar technology, and it is not issued or guaranteed by a central bank or public authority, is not a digital representation of an official currency of a country or electronic money, and thus does not have legal status of an official currency of a country or money, and is not legal tender, whether or not denominated in legal tender. Blockchain can be either public or private in an enterprise environment, and I believe it's important to know the differences between these two types. In a public blockchain, all transactions recorded on the ledger are available to all network users. It is decentralized, without central control, accessible, anyone can join or leave the network or validate transactions. It is distributed, the entire network is distributed to all the participants. It is immutable. The data kept in a blockchain cannot be altered. It is neutral. The network does not distinguish between individuals, accounts, and reasons for sending and receiving Bitcoin from anywhere, anytime, and to anyone. No geographical restrictions apply. The network can be accessed from anywhere, provided one has access to one's private key. No license or authorization is required to join the network. A private blockchain, on the other hand, is a special type of blockchain technology where only a single organization has authority over the network. So it means that it's not open for the public to join in. A private blockchain isn't fully decentralized like the public blockchain platforms. It's more of a partial decentralized solution. However, in private blockchain platforms, you will get regulations that other platforms don't have. So all the nodes have to abide by certain rules to ensure a company's proper flow. What is more, private blockchain platforms have authentication processes before you can log into the network. What this process does is filter any intruders trying to get into the system. For the financial industry, banks and financial markets, blockchain offer many benefits. Blockchains can decentralize banking functions and provide cost-effective, efficient, and transparent solutions, secure solutions through enhanced security and efficiency, instantaneous settlement once the ledger is updated, real-time execution of payments, allowing real-time detection and prevention of fraud, and of course, elimination of single-point failures. However, transferring to a new technology, such as blockchain, is not one of the easiest things to do, as there are, of course, some barriers, such as problems with existing legacy systems, the initial investment costs, issues with firm culture, employee training and customer perceptions, the classical personal data debate, regulatory uncertainty, which we are close to solving here in Cyprus, and the usual price bubbles, as with any new innovation, and volatilities in cryptocurrencies, which are key barriers against wider adoption by banks as an alternative for fiat currencies. However, through education, collaboration, and experience, the banking business model would fundamentally change with the adoption of blockchains. The financial sector would become more accountable with increasingly transparent governance systems, more efficient business processes, and develop improved alignment of objectives between banks and stakeholders. Subsequently, banks would gain access to a wider capital base, create new products and services through blockchains, and experience efficient regulatory compliance and oversight. The potential of blockchain technology has caught attention worldwide. It has a huge crowd around it that are looking for opportunities to adopt and leverage the benefits of this disruptive technology in their business. Today, most banks are embracing this new technology through partnerships with fintechs or other in-house developments. For example, Citigroup has initiated around 3 blockchain-based applications, such as creating Citicoin, its own cryptocurrency. JP Morgan uses blockchain technology to help improve money transfers. Santander developed a blockchain-based transaction platform. Societe Generale issued the first structured product on a public blockchain. BNP Paribas completed its first real-time blockchain payment. Barclays is exploring both internal applications and external collaborations of blockchain-based services with startups in the financial sector. Monetary Authority of Singapore and Bank of Canada explored the use case of interbank payments. And these are only few examples of areas of blockchain adoption in banking today. Blockchain technologies and their associated market gained tremendous momentum during the years. Before implementing blockchain technology, companies, managers, and developers need to ask themselves one question: why blockchain? As blockchain technology is relatively new, many organizations are looking for ways to integrate into their operations and systems. But at the moment, there is a fear in the market not to miss this opportunity, the well-known fear of missing out syndrome, and most organizations approach the problem somewhat like, we want to use blockchain somewhere, where can we do that? Which leads to frustrations in the technology as it cannot be applied everywhere. A better approach is for companies to understand blockchain technology, see where it fits, and then identify the systems that may fit. For successful blockchain adoption and sustainability in banking, it is important to firstly recognize the technology itself and its limitations. We need to determine if blockchain is suitable for a particular system or activity and what kind of blockchain technology, public or private, will benefit most. I think we should do our research and use blockchain where and when it is needed, and not because it is new, in order to avoid disappointments and save the technology from unnecessary criticism. Thank you all for your attention. Thank you, Mr. Chairman.
Thank you very much. Thank you, Mr. Charalambous. And we move on to the last session of today's event, a panel discussion with the title of Disruption and Innovation in the Fintech Market. I call to the stage Mr. John Georgoulas that will be moderating the panel.
Hello, everyone. Hello, everyone. It's always difficult to be a part of the last session. It's amazing to listen to all the bankers being excited about fintech, but I don't see any effort on behalf of the banks to collaborate with fintech. You might be wondering what is our association. So our association is under the Chamber of Commerce KEVE, and it's the Association of Cyprus Electronic Money and Payment Institutions. We already have 11 members, EMIs and PIs. We promote and we secure the interests of our own industry. And we are in direct talk with the regulators and the government. So we accept only licensed institutions from Cyprus, from the Central Bank of Cyprus, and we accept European institutions that have presence here with at least one employer. So please let me call on stage Mr. Christos Tiniozou, the Managing Director of iSpiral and an expert on RegTech. I suppose Mr. Mani Tsarfati, the Senior Manager of Red Hat, will join us online. And Mr. Michalis Charalambidis, the CEO of one of the largest EMIs in Cyprus and in Europe, EcomBX. Welcome, everyone. Welcome, Mani. So what we're going to do, you all going to have some time to give your remarks, and then we're going to move forward to some specific questions. So let's start with Christos.
Thank you, John. It's a pleasure to be here. I mean, what I would like to start with, as an anti-money laundering and fraud detection technology firm, we continuously come up with new scenarios, and we constantly change our machine learning models in order to detect and prevent fraud. Now, to do that, we need to know what are the future trends, and we need definite facts so that we can embed them within our machine learning models. So I will be focusing on those future trends that eventually I think the fintech companies will find useful as well in order to tune maybe their strategy and how they will be looking the future forward. So I will start first with the changes in the demographics. And this is something that the speaker from the PwC was mentioned earlier as well. So we see a great shift on the global population. Okay, so we see, for example, Southeast Asia, including India, will be 27% of the global population. We see Africa reaching by 2030 21%. So it's going to be going from 1.2 billion to 2 billion within the next 10 years. We see Europe population declining. So we go to 8% by 2030. So we go from the second position to the sixth position within the next 8 years. And then we see China as well declining from 23% of the global population to 16%. What I would like to say on this point is that definitely you see a shift on the power of who is holding the money. So you see, we will see immigration coming from Africa to Europe, and this is going to be an opportunity for fintech to bank the unbanked people. So there is an opportunity there. Also, I mean, fintech should be able to tune their strategy so that they can, if they're able to do it, to enter into the African market, especially within the sub-Saharan market, which is going to be a huge market for the financial technology experts. Now, the other fact that I find very interesting is that by 2030, 40% of the population will be above 60 years old. Okay, and that category will be holding 50% of the net worth globally. I haven't seen so far any fintech apps focusing on that population. I mean, most of them right now are focusing on ages from 18 to 50. So there is a huge opportunity based on the researches that we have done on that kind of population. At the same time, that population, that category has a lot of risks. Has a lot of risk as far as fraud goes. I mean, we know cases where, people that were selling insurance to 65 years old people, okay, which is okay, but that person was legally blind. So eventually the family should need to use that kind of advanced technology in order to detect any type of abnormalities within the transactional behavior such people. Okay, so said that, the other very important fact that we find during our research is related to women. So by 2030,
I wanted to stop you. Are you sure this is the right panel for that?
Definitely. So by 2030, women will hold 50% of the net worth globally. And we see in Europe and the US right now that 40% of households, women are earning more money. And this is impacting the direction that fintech should be taking on focusing and designing what the managing director of Accenture said before, designing financial technology apps that focus on certain challenges and to tackle certain major issues. Just to say something on that fact as well, did you know, Michael, that women are saving more money when they're single? And then
I knew the opposite, totally the opposite. So
and then
I stand corrected then in this case.
And then when they get married, men start saving more money because they freak out from the whole situation, I guess.
Okay, so, because they lose many other things, I assume that's why.
Okay, and finally, I would like to, end up with the point of accepting artificial intelligence as part of our daily life. Okay, so most of us find it difficult, let's say, to accept that a car will be driving us to work back and forth, right? And when we hear that, let's say, a car accident happened with an autonomous car, we usually don't want to be in the place of the co-driver, okay? But if we see the other side of how many accidents are happening from drunk drivers or from mistakes, we will see that AI is going towards the right direction, especially when we're using, let's say, primitive measures of communicating in the road, like tipping the lights if there is a policeman on the other side, or like the horn. And said that, I would like to end up with the fact that, yes, there are ethical issues related to accepting AI, but this is the right forward in order to adopt this type of technology.
So thank you. You have covered in about 5 minutes most of the technology issues that are happening globally. So, Mihaly.
Yeah. Well, I think after Christos we'll call it a day, so he covered most of the topics. Thank you, everybody, for staying here. It's a small but selective crowd, and thank you for your patience staying until the end of the final panel. Of what I understand, a lot of interesting discussions were happening since the morning. I'll pick up from where John left off, saying that as an association, we do have an agenda which is to moderate and up the game of the Cyprus economy and community when it comes to fintech companies. And we anticipate that we'll be able to have this constructive discussion with the stakeholders of the local banking system as well, holding all the respect and all the contribution that they have done throughout the years in the Cyprus economy. However, it's time that we have open discussions about these topics and see how we can take this country forward, which we are all investing, and the government especially, towards the pillar of creating Cyprus into a destination where we'll be able to attract fintechs. Having said that, we've been saying the word fintech, and even the forum is holding kind of that name as well. But what is really fintechs? It's a very vague word when you really actually reach down and try to understand what it means. Well, financial technology, which can encompass a lot of verticals in the market, can be anything that is licensed under CySEC as a CIF fund, or under the betting authorities as a gaming company, or you can even call companies that have video game providers fintech companies, because at the end of the day, they through the games they gather an aggregated pot where they're able to have different commodities or different digital assets that are gathered and aggregated there in order to facilitate a gaming environment, or in-game purchases as well. So in this case, we'll focus more on fintechs when it comes to the regulatory scope of companies that are related to the banking industry. There is nothing, at least from our industry, coming from an EMI and payment institution perspective, holding multiple licenses across the globe. It's very important to say that we do work on the existing banking rails of the establishment. There is really not a big change when it comes to regulatory scope of fintechs and how they operate. It's basically imagine the rails of a train, and that's the banking environment, that's how banking works. We follow the same rails. What we basically essentially change is the wagon, is the engine that sits on top and executes the same ride. So in this perspective, we have seen a big change in the industry. I think that everybody that comes from economic and financial background, or even personal background, you have seen a big change in the industry. We have seen the banks on a global and European scale suffering. They have been suffering when it comes to the vertical of generating new sources of revenue. The credit lines is the major vertical where the banks are focusing on, and a collaboration with the fintech companies, I believe, is the only way forward. We have seen since the initial days of the regulatory scope of electronic money institutions and payment institutions, where the PSD2 was issued by the European Commission, we have seen a very good leap forward when it comes to leveling the playing field and collaboration between the two different institutions. But there is still a long way ahead. If the banks don't understand that a collaboration with fintech companies is essential, both are bound to fail. Success, whether it comes for fintechs or banks, relies on a joint effort forwards, because the Generation Z has a totally different appetite when it comes to how they will be handling their management of assets or of credit. And they are not in an appetite, Generation Z, to go into deep credit lines where they purchase assets, house, apartments, or anything else through credit. They would rather pay rent and enjoy anything that they have to do with salaries that allows them, based on their revenue, to enjoy their life and travel the world, or spend it on different other technologies or different other luxuries that their pocket can facilitate, rather than living on credit. So if we take this into consideration, we can understand that the future of credit is bound to just shrink more and more. So that revenue of the banking industry needs to be replaced with another vertical. That other vertical is the fintechs. Now, we come to another story when it comes to the fintechs. So how will the fintechs salvage and create a new vertical of revenue for the banks? Well, we have seen huge fintechs, without saying any names, on a global scale, but we had one big let's say, crash of a fintech, which was Wirecard during the past few years, which was one of the biggest fintech EMIs in the European Union out of Germany. That was a huge downfall when it came to actually lifting the carpet and being able to see what the true income and revenues of the company was. So most of the fintechs, which are large, they are now exposed to huge crowdfunding, or to actually trying to penetrate in the market and obtaining a critical mass that is already served by the banks. Obtaining a critical mass which is opportunist, based on the price sensitivity that exists out there, will not generate revenues. So most of you, I'm sure you have e-wallets from different big EMI companies or different fintech companies in Europe. You're already holding it. You're already holding their card. You're holding their mobile application. And you're thinking, wow, I'm getting free services, I'm getting free transactions, I'm getting free interbanking transactions, I'm getting the most cost-effective currency conversions, or even exchanging digital assets. Well, free or low price comes at a price for the company, at a price on their balance sheet, on their revenue. So yes, fintechs today, they're not really generating the profit they should be generating in order to be sustainable for the future. Very few are managing to have a profit margin and a healthy balance sheet at the end of the day. I do take pride that we're in one of them. But that is, again, the cost of taking pride of being within the companies that create a healthy balance sheet is because we have a slower growth and organic growth, while the rest of the competition is creating spikes in terms of their growth in the market. So it's a discussion that needs to be taken into serious consideration, and I believe that the collaboration with the banking industry and anything that has to do with blockchain technology and digital assets, I would even say crypto assets, is of essence in order to take us to the next leap. We have seen during the Brexit, the Bank of England moving in very solid and fast steps towards the stablecoin, which has allowed their market to create more confidence. And I'm hoping that this is going to be the way forward that we're going to be seeing in Cyprus, which we want to make into a fintech and reg destination for many international companies. So if we're just aiming at attracting companies just so that their UBOs can get passports and not to create a real essence in Cyprus and a real value to our reg scope, then I think, again, that in just 5 years we'll be having the same discussion about collapsing. So these are the things I would like to cover. I hope that we'll be able to cover them and it's not going to be too boring.
Thank you, Michalis. This is a very optimistic and beautiful picture. So money, last but not least, and I would just ask you to be a bit faster so that we have some time for discussion.
Okay, so thank you all. It's a great pleasure to join this, to attend this event, and I'm sorry it's from remote, so next time I'll come in person. My name is Benny Tsarfati. I'm a solution architect within the Red Hat, and I'm managing the solution architect at Israel, Greece, and Cyprus, and I'm engaged with most of the big banks in Israel and Greece. Here in Cyprus, we are working tightly with Zebra consultants, and we deliver the best of open source. Open source means a place for people to innovate, to be free, to dream, to create something new. And then the role of Red Hat is to take all those innovation and amazing innovation into enterprise class. And if I will take 2 points from Christos and Michalis, they both talk about we need to manage the tension between the traditional banks and the fintech. And we need to enable them to work together because this is the only way that we can manage, control on one hand, and innovate and go to a new market, a new business model on the other hand. And I'll try to share with you some of these topics and how we can get there. The first point that I want to say that change is the new normal. It's clear, it's obvious. The COVID exposed it in the best way and in the worst way. But in order to deal with this topic, the word is adaptability. Adaptability. If you look into the dictionary, I think 2 points are raised out of that. One of them saying quality of being able to adjust to new conditions, and the second is the capacity to be modified for a new use or purpose. And this is the most important part of when we are speaking between fintech and banking. When we set up the banking, no one thought about this adaptability. What does it mean? In a changing world, in a changing economy, in uncertainty times, banking services will be able to adopt, and this is one of the topics that we have in earlier conversation about the ability to manage, to control, to manage regulation for that. If we want to survive and if we want to lead, we must build a system that will be adaptable. And this is the new world. The ability to do that is through architecture and the right architecture to manage. Otherwise, we will create, again, silos and silos, and no one will enjoy and benefit of that. By the way, there will be some that will enjoy out of that because the big giants outside there, the big Google or Apple, they already set up the Google Pay, Apple Pay, and they will set up another services in parallel. The issue is that this change in the architecture of the banking is always create kind of scurrying and people are stepping back. They are afraid that someone will fire them. So I share with you some of the success that we did in several banks. I promise you, no one will fire since we are setting a new architecture and we are setting a new services, and we will double and even more our business. So we will talk about cloud native, DevOps, all this stuff, and how to make the big giants, big banks, the traditional banks, ready to change and changing very fast. I will hand over back to you.
Excellent. Thank you so much, Mani. Let's move forward to some questions I had in mind, and maybe someone from the floor later. So let's come to you, Michalis. So let us know, is there a need of a fintech bank in Cyprus in the sense of holding a credit banking license?
Well, actually, that's a very nicely staged question. John, I mean, we've had these discussions many times together, and that's why you took over this sacrifice of exposing, yourself and becoming the president of the XMP Association. And the reason I say it's a sacrifice is because I understand how hard it is to be able to communicate the interests of fintech companies in an environment like Cyprus. Well, yes, there definitely is, and that's the short answer. But the logic behind it, which is the most important thing, is why is there such a need? As we said before, the banks have been created in such a way that they have overgrown and they have become obese in terms, and I'm talking about globally, not just in terms of Cyprus. They have become too spread in terms of the services that they're offering. And this has created many departments and many silos which offer different services when it comes to offering the banking verticals to the market. One might be the corporate banking, another one might be investment banking, another one is retail, credit, and so on and so forth. And now we're even talking about the latest arm, which is what banks call fintech as well, that they're giving a fintech offering in the market, which I would say that it's actually partially true. They're giving a fintech offering, but not to its full extent, because that is not what their DNA comes from or what they're formulated to be doing. So what I would say in the near future, what we would be seeing is a segmentation of different banks that specialize on different verticals and on different industries. So you should be seeing a bank that specializes on credit, and most likely that credit will be given either to other institutions, so other smaller or medium banks that are in need to give to their clients credit lines. So there is a centralized banking provider when it comes to credit. You would be seeing banks or investment firms that are offering different investment services. And then in the same logic, you should be seeing a bank that is offering its fintech environment ecosystem to other banks or other fintech companies. So definitely you need a fintech bank which will be able to understand the whole regulatory scope and the whole cycle when it comes to fintech services in order to be able to facilitate such services and the expansion of those services into the market in other banks. So it's kind of creating an osmosis between a traditional banking or retail system with a fintech bank. If a fintech bank doesn't know the A to Z of fintech, that has to do anything from issuing to acquiring, e-wallet services, cryptos, digital assets, gaming, betting, forex, and all of those, so that they'll be able to understand the money flow from the individual up to the regulated company, and then whether that's reinvested or given as marketing expenses or given as dividends or whatever else is happening in these complex fintech structures, then how can an existing retail bank, which says has a fintech offering in the market, be able to facilitate and understand the risks associated with these industries? We're talking about big risks, I understand, and that's why the banking industry keeps saying, you know what, Forex is risky, betting, it's risky, video gaming, it's risky, e-wallets, EMIs, payment institutions is risky. Of course it is, because they were not made to understand this risk. A fintech bank will understand the whole cycle and technology to monitor this, to ensure that this risk is mitigated based on the technology and the supervision that is being done on the different partners giving this service outside. So the biggest demand or the biggest reason to exist as a fintech bank, or the creation of this, is to ensure that we safeguard the banking system from any AML and compliance risks, and in the meantime, foster the industry to grow more. Because now they're not fostering the industry to grow more by just declining it, and it's reasonable because they don't understand the market, and at the same time, they're not generating new revenues or allowing new players in the market.
So what you're saying, it will be, it makes me think that it will be easier for the regulator as well to have everything under one institution so they can understand better fintech for the future. So let's move forward to Mr. Tiniozu. Christo, banks are putting massive effort and resources into digitalization, but what does this mean regarding their other obligations such as reporting, KYC procedures, even capital requirements? Is the necessary balance in place? What do you think?
Look, I mean, everyone has the same regulatory obligations. And the banks, they know what they need to do. Now, what changes is what is accepted at first by the regulator. I mean, what do they accept as a mean of digitally identifying a client? Okay, I mean, so far, we all know that the central bank did not give any directions like other central banks have given as far as how you can identify a remote client, a remote new client. Okay, I think this is in the process of doing that. But eventually, what other regulators are requesting is whether you are going to be accepting a liveness detection selfie identification of the clients, or and then proceeding with verifying the actual official identity documentation to see if it's authenticated or not, and then doing a biometric face matching in order to close the cycle of the digital identity verification. Some other countries, for example, in Germany, they are not accepting liveness detection as a means of identification. They want a video identification and an acceptance from a real agent. Okay, so depending on the jurisdiction you are, the regulator is giving their own, let's say, way of accepting this kind of onboarding. Now, from there on, you have also the acceptance. For example, CySEC accepts as a means of identification the check within external verifiable data sources. For example, if you are onboarding someone from China, you can check whether you can access the national ID database in China to see that the data that the customer has given you, for example, full name, address, date of birth, actually exists within those verifiable data sources. So this is a way to identify electronically a client. So you see that every regulator is saying different things. So I mean, it's difficult to bring everything to everyone together, of course, but eventually we need to have a clear path of what fintechs should be doing in order to accept a client.
Okay, so a question to both of you. Is there a need of a centralized KYC system?
Actually, I will pick up from where Christos left off, which he's absolutely right when it comes to the local regulator in terms of not giving yet the most clear directives in terms of digital onboarding, but that is actually in the process, in the pipeline. It has already been ratified by the Parliament, and the reason I will give, at least on a local scale, why this directive has not been issued yet is because naturally, and this is answering back to your question, actually we have been bombarded as a jurisdiction for more than a decade now. And any European country that tries to actually go ahead of the Central European game when it comes to fintechs or try to do some innovations, even as Christos said about CySEC, which has been more progressive, they're actually being shot all the time time from the European Union in terms of why are we creating more relaxed measures, or why are we being more risk averse, and why we're creating some digital onboarding and less traditional means of onboarding clients, and that would become a higher and more risky jurisdiction. This has actually been in the focus of Cyprus. I mean, it's not just now because of the passports. We have seen it since 2010 and onwards. I mean, even in 2013, don't get me started about the bail-in, which, if you're asking me, there are big European banks which have a bigger hole when it comes to their credit and NPLs than what the Cyprus system had, but we would rather do the guinea pig in Cyprus rather than somewhere else. So having said that, we're seeing a European Union of two speeds. So the European Union needs to address the supranational issue and rights of each country, and yes, indeed, centralize the legislation framework for all European countries. We have seen the PSD2 saying we will level the playing field between banks and fintechs. It has been kind of semi-done. We're now should be seeing a PSD3, but when it comes to supranational and intergovernmental rules between member states, we have allowed a European Union of two speeds, and we have not allowed smaller countries like Cyprus, Lithuania, Estonia, Malta, just name it. Okay, yes, it's smaller European countries, but they are not allowed to have the same reputation and the same glory when it comes to Central European countries.
I'm sorry, I'm very sorry to let you know, but because you were not here, I'm not sure if there is going to be anytime soon PSD3, because the governor of the central bank said that they will revision PSD2.
Okay.
So I will add on the centralized KYC solution. I was within an event, a governmental event actually, like 3 years ago, that we had the discussion of a centralized KYC solution through blockchain. And the CIOs that were here, were in that event as well. We ended up that, first of all, who's going to be owning the data of the client? The owner of the data should be the user, correct? But at the same time, who has the responsibility of updating the data? So we're not talking only about the digital identification. I mean, liveness, document verification, biometric face matching. We're talking about economic profile of the clients. So at that point, everyone was saying that the responsibility is on the organization itself. So this is not called a centralized KYC at the end of the day. So it can be called centralized digital identification platform, so that you can share the cost of digitally identifying the client. But you cannot have a centralized KYC, since the responsibility is on the organization itself to do the KYC.
Thank you, Christos. Mani, what is the next revolution in the fintech industry with regards to cloud services and cybersecurity? What do you think?
So, first of all, I think the first point, and it's very interesting, about the role of fintech and regulation. I don't want fintech to spend time on regulation. I can tell you, I have meetings with CIOs almost twice a week. They always complain they are spending between 30 to 40% of their time on regulation and compliance. So we are spending too much time, too much effort, and we have institutes that knows to do regulation. So if we will find out a model that we can benefit from the practices that are already there, and we can create new kind of services for banks, and this collaboration between banks and fintech, or insurance company and fintech, this will create the value. So one of the big challenges, the people are thinking about cloud as a solution. Cloud is not a solution. Cloud is something that enables us to scale up, to go fast, to do something new, to change model. Christos talk about KYC. The new giants, Amazon, Facebook, they are changing the mindset of the customers. They don't want to know their customer. They are changing their mind. So this is going to be the new models, and we should enable this together. Means we want to enjoy and benefit this innovation, and at the same time, we don't want to spend their time on regulation. I think that PSD did something very good, very nice, always place to improve, but the idea that someone take care for the regulation because he already did it and he will do it for years to come. This is what we see now in the market is that more and more banks are moving to cloud. And again, moving to cloud depends on what? Because currently the place to do this move create a lot of concerns about security and privacy and stuff like that. What we have now is a totally different architecture. An architecture that's called cloud native means application and services that build to run on cloud, either on the on-premise cloud or outside of the cloud, and it will manage from the one place. I'll give you one example just to understand. We are talking always about software leads the world, everything should be as a software. Nowadays, with this architecture, we are doing regulation and security as a code. We are storing the regulation and the security within the same GitLab, like a code. What does it mean? I have a bank that's running in US and in Europe. He needs to manage two different regulations. He needed to comply for two different rules and to enforce this regulation. So the same system, the same algorithm with the ability to enforce regulation for the different sides of the globe, this will create the new ability to adopt new technology. And this is what is really the point. We need to build institutes, or nowadays we are using a lot the terminology of big giants, or we call it platform company that will give this kind of services of regulation and security and all those stacks that goes against innovation, while we need to give the dreamers to dream. And we have now the ability with this technology and these capabilities to enable it.
Manny, we're running out of time.
Okay, 1 minute. The issue is that people are very concerned about what they are going to do. And one of the big challenges and the big processes that we are running today is about the internal culture within banks. We need to change the internal culture to enable that, and then everyone will benefit of that.
Thank you so much. I think we have 1 minute to take a question from the crowd if there is any. If there is not, I have one last question. Is there any question? No? Okay, so it's going well, I think. Last, very fast question. Michali, name me 3 major challenges you're facing with the government or the regulator. Very fast and brief.
I would say one would be social change. It's not the government or the regulator. So the people need to change mindset when it comes to centralizing the data of their information. We're still working on a very primordial way as a society in terms of allowing the aggregation of our personal information. We need to understand that there's nothing to hide when it comes to allowing the information flow and the rich data to happen. I would say that, John, it's not just 3 points that I would like to stand to. It's like asking me to make a puzzle with 3 pieces. I would say a puzzle needs many more pieces than just 3. So I would say that the positive side of things is that there is change happening. There is an appetite from the regulators, and there are a lot of RegTech companies out there which are specializing in facilitating fintech companies to be able to grow and to ring fence any risks that they have, like Christos himself, which is doing a very good job at it as well.
Thank you so much. We are on time. Thanks, everyone. Mr. Kritiotis is here.
Thank you. So we reached the end of another banking forum and Fintech Expo. The message is clear. Banks need to transform in a way that deliver results for themselves, their customers, and the society as a whole. They need to invest in their transformation to respond in a more agile way to market and customer opportunities with a focus on strategic cost management, greater resilience, and enhanced customer centricity, which will position them to drive more sustainable change. I would like to thank everybody for attending today's event. I would like to thank our panelists, our speakers, and IMH for organizing this event. And I wish you all the best. Stay safe, and I hope we'll see you in the next Banking Forum. Thank you very much. Thank you for attending.
It's a new world, and organizations must think in innovative ways to stay ahead. This is where Logicom Solutions comes in. Logicom Solutions works with the largest organizations in the region to implement a digital transformation agenda that enables organizations to always stay relevant, while partnerships with the largest technology vendors and consulting firms in the world, like Cisco, Accenture, Microsoft, and Dell Technologies, help transform ideas into digital businesses. The Business Consulting Services Unit provides high-quality value, adding advisory services that evolve around building a digital future for businesses, and identifies growth opportunities with a data-first model. Business Consulting Services Unit helps organizations identify and unlock new sources of